Good morning, ladies and gentlemen, and welcome to COL Investor Summit 2025. Thank you for being with us today, and we hope you are excited for our program because we will be hearing directly from the company leaders behind some of the country's most compelling growth stories. I'm Lorraine Reyes, and I will be your host for today. Before we begin, let me note that there will be no formal breaks during the program, but please step out anytime you need to go to the restrooms located outside, and feel free to have some coffee at the back at your convenience. And now, to officially open today's program, I'd like to welcome someone who drives all of us at COL to always put our clients' interests at heart, with today's program reflecting that very commitment. Please join me in welcoming the President and CEO of COL Financial, Mr. Dino Bate.
Hi, good morning everyone, and I'd like to thank everybody for being here today. It's been a long time since we've had this face-to-face event, and I'm very happy to see that despite the weather, which has been very unpredictable, you're all here today. And I was telling my team, this just shows that people are really hungry to hear what these experts and people from the different companies have to say today. So I just want to let you know that, first of all, I'd like, of course, I have to welcome everybody today and thank you for being here. We really appreciate the effort that you've made. But I just want to tell you that when we did this event, we were being asked and questioned by several people, why are you doing an event and talk about the local stocks when the market has really been very tough and challenging lately? You know, what is there to talk about? Actually, I don't blame them. I think as of yesterday's close, the market is down almost 8%. And it was just slightly up last year. That was a small bonus that we had last year. And, and we feel that there's been a disconnect from what we see from, the performance of our economy, which has been cushioned by, the strong domestic demand and the monetary policy support that we're seeing. And even if you compare ourselves in the region, these factors definitely make us stand out. But the markets have not really been reflecting this. And that's why we felt that, we wanted people to understand that this does not, this kind of markets, there are definitely opportunities that people will have to take advantage of. And we want you to remain focused and disciplined and looking for good businesses that have long-term growth. And we've seen also some companies that have actually done very well because of their strong earnings and sectoral tailwinds that we're seeing. Particularly, we also believe that we're seeing valuations remain very compelling. And for the active investors like yourself, it's a great time to buy good quality companies at very good prices. Okay, so, I want to just tell you that, of course, the market keeps evolving, and today, being a stock picker is very critical in this journey, and you have to be very patient about looking at the companies you like and understanding them, and that's the reason why we have these 5 companies today, where you will hear directly from these people about their business, learn about their business, what drives it, and what's behind the stock. So I'd like to, again, thank you for the companies and their representatives for being here today. Thank you for giving your time and sharing your insights to this group of investors that are really dedicated about managing their portfolio and building wealth. And I'd like to also, again, thank everybody today for being here. And I hope you will not only learn new insights or see opportunities, but strengthen your conviction about the opportunities that this market has to offer. So thank you again, and have a pleasant day.
Thank you, Sir Dino, for that wonderful message. This is indeed a great start to our event today. So now, to lead our conversations throughout today's session, let us all welcome our moderators who will help us dive deeper into each company's story and strategies. Let me call on first our moderator to the stage, our head of research, Mr. Charles Ang. And joining him this morning is no other than our Chief Equity Strategist, Ms. April Lee Tan. All right, and now, to kick off our series of company presentations, let's begin with the mining sector. Our first company is Apex Mining, is one of the Philippines' leading gold producers. With gold prices hovering at all-time highs amid global uncertainty, Apex Mining has become one of the best performers in the PSE, rallying over 180% year to date. Is Apex Mining more than just a play on gold prices? Is there a deeper growth story here? And ultimately, is there still room for the stock to run? To tell us more about Apex Mining, we have the Senior Vice President, Chief Finance Officer of Apex Mining, and also the company's Treasurer and Compliance Officer. As CFO, he manages all the internal and external finance dealings of Apex Mining and its subsidiaries. He's an invaluable leader of Apex Mining's finance team, having held various positions in the managerial and executive levels since joining the company in 2012. Today, he is at the helm of securing strategic funding and managing the balance sheet of Apex Mining to ensure the company's continued profitability. Let's all give a round of applause for Mr. Billy Torres.
Hey, good morning, Billy. Thank
Good
you for
morning.
joining us in the show today.
Thank you for inviting Apex, and also good morning to our investors.
Okay, thank you so much. So let's begin with the basic, like personally, Apex Mining isn't a stock that I've talked about before, even during the pandemic or before the pandemic. But we kind of noticed that its performance is so strong. And then, when I looked at the Bloomberg, I realized you're a very profitable gold mining company. So that said, maybe you can share with us a background about your operations in
Sure.
Apex.
I have a slide. I'll give some basic information regarding our operations. And yeah, it's true na medyo this year talaga medyo maganda yung naging performance ng company namin. We're operating in Maco, Davao de Oro. So if you're traveling from Davao Airport going to our mine site, it will take you around 2.5 hours by land. So ganun siya kalayo. And currently, yung aming Maco mine, that contributes 90% of our revenue. So dyan nanggagaling yung main revenue namin from the sale of gold and silver. It currently operates at 2,600 to 2,800 tons per day. So ano yung tons per day? Ito yung, di ba, so pag nagmina kami, we have this isang tonelada ng ore. Then we get around 4 grams, 3 to 4 grams of gold per ore. So we process 2,600 per day yan, ganyan. And then we have the Itogon mine. This is a mining company of our subsidiary, Itogon Suyok Resources Incorporated. We own 100% of the company. Ito naman is located in Benguet. It operates around 400 to 500 tons per day. Ito, nag-start lang ng commercial operation noong 2020. Okay. And yung Itogon Suyok Mines ngayon, nagko-contribute siya ng around 10% of our revenue. So yun yung dalawang main source ng revenue namin, the Apex Mining, Maco Mine, and then Itogon Suyok Resources. Yeah. Tapos, we are doing underground mining. So, ito yung we need to do tunnels and follow the veins, yung mga gold veins. This is different from yung iba naman open pit. na ang ginagawa naman is yung they get the copper or gold sa ibabaw ng lupa. They just parang extract it. Kami, we do underground, we go deep, sinusundan namin kung saan yung direction ng gold. Ayan. And of course, we have a pool of different experts. We have geologists. Sila yung mga nagmamapa where we can find yung mga gold and minerals. Then we have mining engineers. Sila naman yung mga nagde-develop ng mga tunnels and making sure na safe yung aming underground operations. Yan. So, this year, yung Apex Mako, last year, yung Apex Mako process 899,000 tons at 2,588 tons per day, and it produced 90,000 ounces. While yung Itogo naman namin, nag-process siya ng 148,000 tons and produce 13,132 ounces. Yan ba?
Okay. So, two questions. First is, syempre ang importante is how long will it last?
Oo.
Ayan.
Meron akong slide na tungkol sa mineral resource namin. So, yung life ng mine, mini-measure siya on the resource that we have dun sa area. Pag sinabi nating resource, ito yung potential na mga nakitang mga gold at minerals doon sa aming tenement. So, in the past years, nagkaroon na ng different studies and lumalabas for yung recent na report namin, which is signed by a competent person, meron kaming 16 million tons na, so di ba sabi ko kanina, nag-process kami ng around 900,000 tons dun sa Mako. So ibig sabihin, we have around more than 10 years to operate. And in the past, pag titingnan natin, from 2 million, nagiging 5 million, nagiging 11 million, it depends kasi on the exploration activity na ginagawa. So we do continuous exploration para nadadagdagan yung resource namin. Hindi naman yan yung, kunyari yung 16, hindi yan yung pag naubos mo siya, tapos ka na. Nadadagdagan yung mga resources namin, depende on the makikita ng mga geologists namin through exploration. Yan. So, more than 10 years.
Sir, follow up lang. Because in mining companies also, di ba, we have resources, you talk about resources, but we also have reserves, right?
Yes,
So, could you explain lang the difference between the two?
Yung resources, ito yung mga minerals na makikita, sa loob ng tenement, based on sa coverage na ginawa ng report. Yung reserve naman, ito na yung mga economical na reserve, kumbaga parang, kunyari kasi yung resources, may area na konti lang yung gold na nakalagay. Kapag minina mo siya, hindi rin siya economical. So, lugi ka din. Pero ang reserve kasi, nandyan na, pinapasok na yung element of cost, na kapag minina mo siya, you still get profit. So, yung reserve naman namin, hindi ko lang naisama, pero it's around 9 million tons, yung recent na aming competent person na technical report. So, that means, ganun pa rin, we still have a long way to go. Ang Apex Mining is a 55-year company na, and continuous yung exploration and development activity pa namin para dun sa loob ng aming around 2,600 hectares dun sa Mako Mine.
Okay, so as a recap, kung resource, 16 years.
Yes.
And then,
pag-reserve, so 9 million divided by around 1 million, let's say 1 million tons per year. So you still have around 10 years, yeah.
And that's based on the current price of gold. Gold kayo, di ba?
Yes, based on current price of gold, at saka meron kaming silver din. So, ano siya. And yung reserve din, same as resource, usually yung reserve, nanggagaling yan sa resource. Ang reserve kasi, you do further study, you do further drilling, para kapag nakita mo na yung resource pala ay economical, you add it to the reserve. So, continuous din yung aming development, continuous yung aming drilling, para ma-maintain namin or ma-continue namin yung pag-re-report ng aming resource at reserve. Yan.
I see.
Medyo technical lang siya, pero
Yes, okay
yeah.
yan. Para next time when they read the reports, alam nila and they can differentiate.
Pero that's true. That's a very important number kasi minsan titignan mo siya kung masyado nang maiksi yung resource niya o konti yung resource niya or reserve niya, paano siya hanggang ilang taon na lang siya, ganon.
Yeah, okay. So, first off, are there plans to increase the production? Or hanggang dyan muna?
Of course. Yung
Annual.
Apex Mining, I think since 2016 onwards, 2013-14, it started at 650. Noong 2006 nga, it started around 500 tons per day, then increasing gradually, 650. And now we reached 2,500 to 2,800. And our previous disclosures, we're targeting to operate at 3,000 tons per day. Our plant is capable of processing 3,000 tons per day. And we are currently exploring pa with the new technology and process improvement if we can further improve yung capacity ng existing plant namin. And on top of that, we have yung Sangilo mine namin is currently at 500 tons per day because it is currently operating at a 35-hectare area muna. Pero we got the APSA. When we say APSA, it's an application of a permit for a certain area again, and we got the consent already and the endorsement of the LGU to proceed para maging MPSA siya, which is, pag MPSA ka na, you have the contract with the government na pwede mo na siyang minahin. So, yung area na yun, that's 400 hectares, and we can expand naman sa Benguet dun sa part na yon. So we can put up siguro a plant like around 1,000 to 1,500 tons per day in the future. Once ma-perfect na namin yung mga kontrata, tsaka ma-explore and develop na namin yung area.
Yes. So, sir, you mentioned some, because this is very interesting, no? Kasi this could signal the growth for the company, right?
Yeah.
So, all the plans, the plans to potentially increase to 3,000 tons per day for Mako, and also hopefully you can further expand the area for the Itogon mine.
That's right.
So, but if ever that pushes through, I mean, just to help everybody here, no? So, how much, I guess, in terms of cost would that intake? Does it entail a lot of like capex if ever na-approve and then you can, in fact, increase nga the production capacity? Malaki bang gastos yan? Or?
Malaki siya. Well, ang good thing kasi is, for example, yung Mako, meron na siyang nakaset up na, I mean, yung areas were already drilled. Meron na kaming existing mga studies and meron na kaming planta. So, it's a matter of expanding yung capacity and, well, probably creating new plant na, of course, it's also a capital-intensive na planta yan. Kailangan mo magkaroon ng, of course, a significant amount depende dun sa capacity. In the past, yung aming planta sa Mako, it started at a certain level, 1,500, tapos every time tinataasan namin yung capacity para din ma-manage yung hindi abrupt yung biglang maglalagay ka ng malaking capex on that. At saka kasi, if you increase the capacity of a mining area, hindi lang kasi yung planta yung tataasan mo ng capacity. Even yung mga tunnel mo, yung kumukuha ng bato dun sa underground ng mga ginto, kailangan din mag-invest ka ng mga heavy equipment, which yung isang truck is worth 20 million pesos, ganyan, napapasok sa underground. So if you want to increase the capacity of the mill, kung saan dinudurog yung bato, kailangan mag-i-invest ka rin sa pag-i-improve mo nung underground mo. So, yeah, it's mataas yung capex niya pero depende sa capacity. Yung ngayon, for example, yung sa Sangilo, kino-compute pa yan, nasa table pa kung magkano yung aabutin na capex.
Yeah. So, ano na lang, para madaling i-analyze.
Okay.
What is your cost na lang per, kasi di ba per ounce of gold ngayon, nasa
Yes.
3,000 plus. How much is the cost, to produce, syempre, per
So,
ounce.
yes. Iba-iba yan, no? Iba yung cost ng mga nandun sa mga open pit, yung ibang process. Pero on us, underground mining, ang current cash cost namin is at 1.3, pero yung total cost namin is at 1,600 for the Mako mine. And medyo mas mataas dun sa Sangilo, it's around 1,900. So medyo compared to the price of 3,700, profitable talaga siyang operation ngayon.
Oo, but that said, di ba, you're going to do some expansion,
Yeah.
When you do those expansion, will your cost per ounce remain the same or tataas siya?
Habang lumalaki yung capacity ng planta at saka yung tonnage na pinaprocess namin, yung mga fixed cost element nun, mas madami yung nagiging share. So ang tendency niya is lumiliit yung magiging cost per ounces. Ang ano lang, siguro pwede rin siyang tumaas kasi minsan as we go deeper, kumbaga yung dating pinupuntahan namin ng 1 kilometer underground, pag
mahirap na
nag-adjust na kami,
puntahan.
pupunta na kami ng 2 kilometers, so it requires additional fuel, additional, yung tires mo mas mabilis na nasisira. So meron ding increase on that part.
I see. So, another thing interesting that happened to you was the acquisition of Asia Alliance
Yeah,
Mining, no? Maybe you can talk more about that and, what are the prospects. It's not yet operational, no?
Not yet.
Yeah.
Yung Asia Alliance, pakita ko sa inyo yung mapa. Kung sa tingin ko, isa rin magandang, yan. Ayun ako, yung naka-quote. Pero yung Asia Alliance, yung nakikita nyo, yung kulay white na mapa, that's a 19,000 hectare property. Yung kulay blue na, ewan ko kung malinaw sa inyo, yung blue tsaka yung isang medyo red, yun yung apex current na MPSA. So, napapalibutan niya yung buong apex area.
That's Asia Alliance.
That's Asia Alliance. So, yung kulay puti na yan. And noong 2023, we bought yung Asia Alliance on the premise because kailangan namin magkaroon ng tailings dam para sa aming existing operation sa Mako. Kasi on that alone, na-justify namin yung pag-acquire. Kasi yung tailings dam, it is a requirement na meron kang pagtatapunan ng mga pinrases mo na mga ore. Ang tailings yung tawag doon, may paglalagyan ka. And yung existing tailings dam namin will last until, I think, next year. So, kailangan talaga namin ng isang area pa pag-create ng bagong tailings dam. And because of the acquisition, nakapag-proceed kami na mag-start doon sa preparation ng susunod na tailings dam namin. Yan. On top of that, ang Asia Alliance is previously operated yung area na yan. Yung specific area na Amakan, operated siya ng isang mining company dati, North Davao Mining Corporation, processing copper. So, merong copper prospect dyan at saka meron ding gold prospect dyan. Ang maganda lang sa amin, since vein type kami, sinusundan namin yung mga veins ng mga ginto based on mapa, yung nakita namin doon sa area namin, definitely may extend namin yon dito sa Asia Alliance. Kumbaga, ang veins naman tuloy-tuloy lang yan eh. Minsan, yung behavior ng vein papunta sa ganitong direksyon, kaso mapuputol kami kasi hanggang dito lang yung area namin. So, with the acquisition of Asia Alliance, medyo may extend pa namin yung mga nakikita namin na existing veins. Yan.
So another potential area for expansion
That's
for
right.
your resources.
Tapos copper.
Oo.
Copper naman yung
And
ano niya.
copper,
At
oo.
saka meron din siyang gold.
Oo.
Sir, if I may, no? Kasi you mentioned already a lot of potential explorations, di ba? With Mako, meron din, with Itogon, with Asia Alliance, the area. So, typically, but what's the timetable for these exploration projects? I mean, when you say that you're doing exploration, in 2 months ba may result na? And what's the typical, I guess, success rate? I mean, or is it really very difficult to get from exploration to mining?
Yeah. Isa-isa siya. Yung sa Mako, yung existing our capacity going to 3,000, actually may mga times na nare-reach na namin siya. And further going ng additional, depende sa improvement ng process, ongoing yon. Doon naman sa Sangilo, yun nga, we got the consent already kasi ang requirement bago ka maka-operate, of course, you have to get the endorsement of the LGU, which we already have. you have to get the endorsement of the free and prior informed consent of the IPs kung meron doon and the community, which we also got. Tapos, kapag nakuha mo na yun, you get a permit with the government agency under Mines and Geosciences Bureau para papakita mo sa kanila kung paano yung magiging exploration activity mo, paano yung development activity mo, and it takes a lot of time. So, yung 2 months na sinabi mo, medyo imposible for the exploration. Even yung development ng tunnel, usually it takes mga 1 to 2 years depending on yung bilis ng permit, yung availability ng funds, and of course, yung mga sources din ng materials mo, tsaka mga equipment na gagamitin mo. On Asia Alliance, we did verification of minerals. So, kasi before, since na-operate na nga siya, meron na siyang existing na mga study na merong mga copper at saka gold dun sa area. So, nag-focus muna kami dun sa copper kasi yun yung operation dati. And meron na siyang mga naiwan. Ito nakapublish naman to. So meron siyang naiwan na around 61 million tons ng copper concentrate or doon sa area na yon. Kailangan naming i-verify yon kasi kailangan i-update yung study. So we did some drilling through the power of authority to verify minerals na permit, and we're done. Tapos na kami doon. Ginagawa na lang namin yung pagpa-finalize ng report. And before kasi namin ma-issue yung numbers, it has to be signed by a competent person. Kaya hindi ko muna ma-disclose kung ilan yon. Pero
May timeline ba?
yung sa report, preparation na naman siya. So lalabas naman yan hopefully this year.
And then, how long will it take before you can actually
So
start
if you want, kunyari okay na siya, then we get the permit, walang na masyado naging problema. We're targeting siguro mga in 2 years' time, hopefully makapag-commence na or meron na kaming magawang activity doon.
for copper.
For copper,
And, copper prices are a bit depressed right now.
Yeah.
Profitable ba?
Yes,
Kung
doon naman sa initial study namin, okay naman yung, although talagang ongoing pa rin kasi nasa mineral level pa lang, so kinocompute pa lang kung ano yung mga magiging grade. Pero doon sa initial naman, it's profitable. And depende rin yung copper price kasi hindi pa minsan talagang tumataas siya. Pero ngayon medyo
Depressed.
mababa pa yata.
Yeah, depressed. That said, di ba, speaking of, sabi mo nga, matrabaho to get all the permits and what have you. Just wondering your thoughts about the recently signed Large-Scale Mining Act. Like, how will it affect you? Of course, the taxes, additional taxes, plus, pero mapapadali ba?
Oo. Yun namang sa pagpaprocess ng mga documents, medyo talagang naging supportive naman yung ating government on developing yung approving yung mga new mines, new area, and yung process naman talaga, they are finding ways para mas mapabilis. Nagkakaroon na ng parallel process. Previously, bago ka makaproceed sa isang step, you have to complete this step. Pero ngayon, meron nang ini-introduce na while doing this step, pwede mo nang gawin itong step na to para mas mapaiksi yung proseso. Pero in terms of yung bagong pinasa na fiscal regime, this is parang medyo focusing on taxes. I have a slide, sa slide 17, yan. At first glance, additional tax siya sa amin because with the RA 12253, eto sinign to nung this month lang, September 6, then na-publish nung 21, nag-take effect nung 21, fresh pa, no? Pero we will still wait for the IRR, which is, they have 150 days to do that bago ma-implement. So, ang feature nito, we get additional royalty, we pay additional royalty. Depende yung royalty, maganda dito, margin-based siya. Ibig sabihin, so you have the revenue, tanggalin mo yung mga cost mo, and may inintroduce pa siyang mga additional cost na pwedeng ibawas, katulad nung nasa FTAA. And then whatever you get, kunin mo yung percentage, kung pumasok yan ng, let's say, 30% ang iyong income as to your revenue, you pay 1% nun, ganun. So, initial checking, pumapasok kami sa mga 2 to 3%, kasi nga, mataas yung gold price ngayon.
Windfall profit.
Yes. Sa windfall profit, ganun din yung computation niya. idadagdag mo lang yung binayad mo royalty tsaka yung binayad mong income tax, mas magiging maliit yung exposure namin. So mga 1% yung nakikita namin on the income from metallic mining. Hindi siya nakabase sa gross revenue. So additional tax din siya. Then dinefine na yung ring fencing. Ibig sabihin, katulad ni Apex, we have 2 permits. Operating area, MPSA 234 tsaka 225. With this new law, magre-report kami separately for that. And maganda dito, in-improve niya rin yung LGU share. Dati kasi, ang excise tax, babayaran mo sa national and then they will request national to download yung share nila. Minsan it takes time, mga 2 years, 3 years. With this, kailangan bayaran immediately dun sa LGU. And they also get the 40% of the royalty. So, maganda siya kasi mas nagiging, yung share ng government, mas nagiging favorable yon. At saka dun sa LGU naman, of course, mas magiging happy sila and mas magiging supportive sila dun sa mining.
Sa operations.
Yeah. Pero yun, of course, may additional talagang bayad yan.
Oo. So royalties, again, like 1 to 2% for you.
2 to 3%.
2 to 3%.
Yeah.
And then on the windfall profit.
Around 1%.
Around 1%. Oo. And then ring fencing, if I'm not mistaken, kunyari, lugi yung isang mine nyo, hindi nyo
Yes.
pwedeng i-apply yung loss
Oo.
nun sa kabila. So, kanya-kanya yan.
Babayad ka. Kunyari, sobrang income nito, tapos yung isang area mo is sobrang lugi, pero dahil isang company ka, sa reporting magkasama yan eh. So, with this law, bayaran mo yung tax dito, then dito wala ka sigurong tax kasi lugi ka naman, pero mas malaki yung magiging tax exposure mo doon. Currently, yung operation namin is at MPSA 225, yun yung isang MPSA lang. Yung 234 namin, ongoing pa naman yung exploration activity. So wala pang income generating activity na manggagaling doon. Kailangan pa siyang ma-convert into doon sa operating mine bago siya operating permit. Yan.
Yeah. Charles, you wanted to add?
Yeah, in terms of the risks naman, so we talked about the potential exploration, but in terms of what's the biggest risk now of the company?
Well, isa yung climate change. Yung area kasi namin is yung mga mining area na nakapwesto yan dun sa mga medyo merong geological hazardous area talaga eh. Minsan, by nature, doon nagde-deposito yung mga magagandang minerals. Nasa tabi ng bundok, nasa tabi ng bulkan. So, yung katulad nung sa picture natin sa first photo, yan. Makikita nyo, puro bundok siya. So, may exposure talaga kami sa climate change. Although, ang ginagawa naman namin doon, of course, we do some engineering intervention, yung mga area na alam namin na prone, na pwedeng bumagsak anytime, ginagawa namin ng mga iba't ibang physically. Ini-improve namin, netting, nilalagyan namin ng mga yung mga intervention, medyo hindi ko lang alam yung specific term. And
Para
we also,
hindi mag-landslide.
para hindi mag-landslide. Tapos, and we also do yung monitoring. Recently, naglagay kami ng Dynaslope. Ito yung bagong technology. Nakikita namin real-time kung gumagalaw yung lupa. Although ito initiative ng LGU, pero we supported that kasi mas importante dun sa mga community. Sa amin kasi, since may mga expert kaming mga geologists, tapos yung mga planta namin nakaposisyon naman sa tamang area, etong mga monitoring devices, tinutulungan din namin yung community para, alam mo yun, meron kaming weather station para nakikita na namin yung darating na weather. At saka, yung coordination with the LGU, tuloy-tuloy yan. Yung support of the community, tuloy-tuloy yan kapag nagkakaroon ng mga medyo malalakas na ulan tsaka landslide. On top of that, of course, yung price risk namin, maganda lang yung gold price ngayon, nasa 3,007. Kanina I-check, it's 3,755. Sobrang taas niya kumpara nung dati, nasa 1,112 lang, siguro mga 6-7 years ago.
Oo. Tapos yung forex pa.
Yung forex pa, oo.
Yeah.
So yun naman.
Even comparing to just last quarter's gold price, it's
Yes.
like 10% higher, right?
Oo. I think nag-report ako nung second quarter, it's only 3,100 eh. So ngayon, Meron kaming shipment, share ko lang So we have a shipment and sa tingin ko mabebenta ko siya ng 3,750. So definitely mas maganda kaysa
Pero sir, tanong ko lang, baka mamaya naman naka-advance contract na kayo.
Hindi. Ang benta namin is spot. Maganda yung mga may ganyan, yung merong mga hedging or advance contract. Pero for now, mas favorable yung spot kasi taas siya ng taas. So, na-avail namin yung increase ng gold price. Even yung silver, dati it was only 20 and now it's 40, 41, 45 na yata. Oo. So, yan. Na-avail namin yan.
Oo. So, sir, I just want to ask about, potential fundraising. Because if I'm not mistaken, syempre may mga capex kayo, plus, I think the Asia Alliance is not yet fully paid.
Yeah.
Oo. So, that said, do you have, say, mga bond issuance, debt, or even equity raising plans?
For now, yung mga funding namin is being sourced, of course, from our internally generated cash flows. Nag-improve yung cash flows namin because of the improvement in revenue. And of course, yung existing loan namin, yung na-mention mo is yung acquisition namin ng Asia Alliance. It's currently on, we are amortizing it for the next 7 years. With this new plan with the Asia Alliance, definitely magkakaroon yan ng combination ng internally generated fund, bank loans, and may potential for debt or equity issuances din. Pero hindi pa kami naka-final doon sa magiging funding.
Okay, still being studied.
Still being studied. Tsaka kinukuha pa namin yung magiging total kasi nitong mga projects na to. Pero ang maganda talaga kasi, madaling desisyonan because of the gold price. Tsaka, parang dati nag-aalangan ka because bakit ganito yung gold price, baka konting operation lang. And now talagang 3.7. 3.7.
For now.
Araw-araw ko siyang tinitignan Sobrang passionate ako sa gold price.
Okay. Yeah. So Charles, yun. Yeah. Okay, so since we're almost out of time, I guess siguro na lang for the attendees today, if they're looking at mga mining companies, how would you want to tell them about Apex Mining? I mean, what differentiates it from the other listed mining companies?
Well, Apex is, ngayon pa lang, nasa early stage pa lang siya talaga ng expansion. Siguro, in the past, hindi nyo masyadong naririnig. Nakikita nyo lang si Apex as a ticker symbol or another company that you would want to invest, pero walang masyadong nakikita. Pero now, nakita nyo yung performance, dati piso yung share, ngayon 9.50 na yata. In the past 3 years, we are already declaring dividend. Ang policy
yung iba
namin...
ba nagbabayad ng dividend? Yung ibang mining companies nagbabayad?
Nagbabayad din naman sila.
Nagbabayad
Pero
din.
kami kasi recently lang, tapos may policy din kaming nirelease na 10% of our consolidated net income i-declare namin na dividend. Yun yung nangyari nung 2022. Pero nung 23. Pero nung 24 and 25, nag-decide pa yung board to add another 10%. So, lalo na yung 2025, naging parang 20% of our consolidated net income yung aming dividend. And of course, yung expansion namin and the acquisition of Asia Alliance, napakarami niyang story for, for growth. Tsaka operating mine na kasi talaga kami. Na-avail namin yung increases ng gold price dahil nag-ooperate na kami. And hindi namin kailangan nung tipong mag-start ka pa ngayon. If you start now, sobrang gastos ng pag-i-start sa mine. Ito talagang produce lang ng produce. We have stabilized our operation already. So as we expand, hopefully kasama namin kayo dun sa expansion activity namin, tsaka yung operating activity namin para naman sabay tayong nakaka-avail ng benefit ng increasing gold price din, tsaka silver price. Yeah. At tsaka meron akong i-add, April.
Sige, please.
Yung company din namin holds a mining interest in SE72. Ito yung nandoon sa bandang Reed Bank. So, pakita ko lang sa bandang yan. Ang Apex, sabihin ko ng tayo kasi I'm thinking of you're also investing, no? Meron tayong 30% interest dyan sa SE72. So that's 280 kilometers away from the Malampaya and 200 meters away from siguro yung land area ng Palawan. Kaso naka-ano lang siya ngayon, naka-moratorium siya kasi alam naman natin meron ongoing na dispute dyan sa area na yan. Pero hawak natin yung 30% yan. So once mag-operate yan, kapartner natin dyan yung forum, nandyan sila PXP. Yan.
Okay, any other, closing thoughts or, important things that investors need to know about Apex Mining that we weren't able to ask you?
Well, parang nakwento ko na naman lahat, pero ang maganda lang talaga, we are seeing yung gold, ang dami nagpo-forecast ngayon. Before, hindi nila ma-forecast na naaabot ng ganitong price yung gold. Pero ang forecast ng gold ngayon is marami nagsasabi, aabot siya ng 4,000 by end of the year, or 4,500 and 5,000 pa nga yung iba . So, perfect timing. Sumusunod yung ating share price ngayon with the gold price. And makikita nyo rin yung production namin is continuously improving. So, yun lang ang aking masasabi. Mukhang yun pa lang magandang basis na for deciding to invest on Apex Mining.
Okay, so with that, thank you very much, Sir Billy.
Thank you. Thank you very much.
All right. Thank you again, Mr. Billy Torres, for sharing your insights today with us. Again, let's give him a round of applause. Okay, so before we move to our next company, let's hear from Ms. April. What would you like our audience to take away from our session with APX?
Okay, so yeah, I guess the key takeaway is, of course, Apex Mining is a beneficiary of rising gold prices. So if you want, the question is always, okay, gold prices are going up, so how do I capitalize on this? Well, Apex Mining is a good way to do it. And then, but that said, is there anything beyond just gold prices? I guess, that said, we have to monitor updates kasi nga they have other prospects, but right now, still very early stages, the Asia Alliance Mining, no? Yun lang, and diba, copper potentially, but then copper not so exciting. But at least, diba, they have enough resources and reserves, yeah?
I'll just add very quickly lang because we never talked about valuations, no? So I just did annualized, no, the second quarter earnings, added a little bit of premium because of the even higher gold price, no? So I'm like based on our estimates, it's roughly currently trading at around 7.5 times PE if we're talking about like forward earnings, assuming current gold price. If you compare it to like global gold mining companies, it's about like 13 times. So a little bit of a discount. Of course, we know a lot of the Philippine companies naman may discount, but that's still good to hear, right? So it's not that extended. Right?
Yeah, so potential upside on the valuation plus yung outcome of the exploration of the other mines.
All right, thank you, Ms. April and Sir Charles, for sharing your perspective. So now, from mining, let's turn to renewable energy and REITs, both of which has been gaining more and more investor attention, and our next company sits right at the intersection of both. With markets mostly sideways in recent years, many investors have turned to dividend-yielding stocks for more reliable returns. Our next company is a standout in that space. Not only has it consistently delivered high dividends, but it has also provided strong capital gains with a 19% year-to-date performance. With interest rates easing and ESG investing continuing to gain traction, can Citicore Energy REIT, the country's largest renewable energy REIT, deliver more than just steady income? And to walk us through CREIT's story, we have Mr. Oliver Tan, the President and CEO of listed company Citicore Energy REIT Corporation, the first renewable energy REIT in the Philippines, and its parent company, end-to-end renewable energy developer Citicore Renewable Energy Corporation. With a background in finance, business transformation, and growth strategies, Mr. Tan's leadership paved the way for Citicore to become one of the leading renewable energy players in the Philippines. With a diversified portfolio in solar, wind, and run-of-river hydro, Mr. Tan also holds key positions in the Citicore Megawide Group. Let's all give a warm welcome to Mr. Oliver Tan.
All right. Thank you, sir, for supporting us today. Okay. So obviously, just to share, no, for our clients, and I'm sure for other maybe institutional investors as well, one of the one of the strong like issues now or trends now would be dividend investing. Diba? A lot of people like dividends, and so REITs have been in focus, right? But C-REIT compared to maybe the other REITs, let's say your assets are not as visible to maybe the retail investors, because for others it's like the malls, the offices, they could see it, but for C-REIT it's not exactly the same. So my first question is, can you just give a brief overview of who C-REIT is, and basically what's your portfolio, what's your asset like?
Yeah. Before that, good morning everyone to your audiences. C-REIT actually, the business model of C-REIT is quite simple and straightforward. We own the largest renewable asset portfolio in the Philippines, approximately around 7 million square meters of gross leasable area. Let me emphasize on renewable energy asset portfolio. When we did C-REIT, we practically created a new asset class. Before, as you correctly pointed out, we are also familiar with residential, office, commercial, industrial. With the REIT, we reinvented, created a new asset class. So basically, our assets covers 14 different provinces. We lease out to solar power operator. They are our tenants. Our unique differentiation compared to the other REITs is we enjoy 100% occupancy rate from day one. Let me explain that. Compared to malls or offices where they have multiple tenants come and go, in our case, from day one, our operator tenants has to occupy the whole leasable space. And we also enjoy one of the longest weighted average lease expiration, approximately 20 years. So in terms of lease occupancy volatility, we have the most stable.
Can I ask, like, you said a long weighted average lease expiry. So are the rental rates already predetermined from day one? Or is it like a 5-year and then they renegotiate the rate? Pero 20 years yan.
So we structure our lease agreements with two components. First is what we call the guaranteed base lease. This is a 20 years lease term. Guaranteed base lease basically give us the fixed monthly rate regardless of the performance of our tenants. And we also have the variable lease, which are computed at the end of the year. These are essentially any incremental revenue that our tenants enjoy. Incremental revenue are a function of two factors: higher solar irradiance, which therefore produce higher power generation, and the higher renewal tariff rate, because it's backed up also by long-term power supply agreement. In terms of percentage, guaranteed base lease would approximately be around 98% of our total lease revenue. 2% would be variable. We specifically designed it that way to provide stability in the recurring lease revenue.
If I may ask, sir, for the base, the guaranteed base rate, no, is there an escalation there that's priced in the contract? Or?
Yes. There are escalation pricing in the contract. It's being escalated every year or every 2 years.
But like just to give us an idea, no, roughly like blended basis, like how many percent a year is the escalation? I mean,
On a blended basis, that would be around 2%. Yes.
yeah. Okay. So at least even so, meaning even without let's say new assets being injected, we could expect at least a baseline level of year-on-year growth in revenues.
Yes, yes. And since you mentioned that keyword, I understand that for the past 2 years, our earnings has been relatively boring, flat, but we are already preparing the asset infusion. Most likely, this will happen Q1 of next year. We will be acquiring in batches as our sponsor company, Energize. It's a solar plant. We are targeting total of 1 gigawatt worth of solar plant capacity to be infused into CREIT by next year. Batch 1 probably will be around 200 to 250 megawatt, and then it will be followed every quarter. So that will create revenue growth and obviously dividend growth at the end of the day.
Yeah. So just to help our audience, no. So you mentioned 1 gigawatt additional capacity next year, no. But how does that compare to the current? Like how big is it compared to the current capacity? Total of CREIT?
Yeah. Current actually we measure in terms of square meters because currently CREIT has only one solar plant assets in it. The rest are mostly property. Land.
Land.
Yeah, but for the asset to be acquired next year, this will be solar plants. That's why we're measuring it in gigawatt. So moving forward, we will be measuring in terms of square meter, leasable area, and megawatt for the solar plant capacity.
I see. And that 1 gigawatt, how does it compare to the 700,000? I guess in terms of yield, like what kind of dividends? Like, will it double the market cap of CREIT or, I mean, what's the expectation there? Because hindi nga siya apples to apples eh.
Yeah. So I think the 2 years ago we acquired raw land, right? So we acquired 4 different raw land. The lease rate here are pretty straightforward, like leasing an industrial land, right? Once we acquire this solar asset, we will be able to capture almost 90% of the power generation EBITDA. And that is very significant in terms of probably 2x or 3x compared to the current raw land lease that CREIT is enjoying.
So significant increase
Yes.
in size, no? Okay, sige. And yeah, before Charles, sorry. Tanong ako ng tanong. Kasi di ba may I mean the property companies, for example, there's the 3-year seasoning period. Are you covered by that? Kasi if the plant energizes next year, how can you inject it right away?
Yeah, that's a very good question. Actually, we secure SEC waiver or exemption for this one. Reason being, once our solar plant are certified by third party, this include the lenders, technical advisors, that it achieves successful testing and commissioning, and our equipments are backed up by long-term warranty period. And solar plant is a mature technology. Therefore, we requested for a waiver of the 3-year track record, which SEC granted previously, and we believe for the subsequent round of infusion, SEC will look at it favorably.
So from day one, you can inject na?
Yes. And I think one of the reason behind the 3-year track record is obviously if you build a mall or office, it will take 3 years to ramp up your occupancy rate. Whereas in our case, day one, there's already a full 100% occupancy.
And I believe nga, sir, di ba, correct me if I'm wrong, even like some of your current tenants, they're still constructing the plant, no? But they're already paying the base lease. Is that correct?
Yes, that's the 4 raw land that I mentioned.
Yes.
Our tenant, even when they are constructing, they're paying, which is normal. Even if you lease a land while construction, you have to pay, right? Post completion of the plant, CREIT will acquire the solar plant asset, which will boost its recurring revenue.
Sir, you mentioned about the 1 gigawatt again for next year, no? But if we zoom out even further, what's the, I guess, could you share like CREC, maybe this is going more into CREC now, like CREC's like long-term goals, marami pa ba after the 1 gigawatt or, how
Yeah.
is it?
That's correct. CREIT's growth will always track closely with its sponsor growth. So if you look at CREC, we have a goal of 5 gigawatt in 5 years. First gigawatt are already achieved. We're already energizing one plant after the other. In fact, last Monday we just energized our Batangas plant. We already started construction for the second gigawatt, and with our recent, I'm not sure if I should already consider that official wins for the JF4. We've won quite a sizable long-term offtake contract there. So we have visibility. We, meaning the sponsor, has clear visibility of the 5 gigawatt in its pipeline projects. Hence, CREIT's visibility also for asset infusion growth.
Now looking further into the process of the asset injection, no? Because I noticed like in the past one, you first raised debt, right? Meaning CREIT raised debt before you bought the asset. Could you explain how it works? Because usually for other like REIT companies, it's usually for like asset for additional shares of the REIT, right? But for CREIT, it's a little different. So can you explain how it works, and will it be the same for next year, the one that you're anticipating?
Yeah. Obviously, we have flexibility in funding options for any asset acquisition. Previously, we did the bond offering to fund the raw land acquisition. That was before the entry of SM into CREIT. For the subsequent round of asset acquisition, we will most likely do the typical asset for share swap. Obviously, having SM as a big brother ensure financial muscles in terms of participating in the asset infusion, which we don't have previously. That's why we did the bond offering. Notwithstanding, we will continue to balance cost of borrowing and the dilution effect to our public shareholders in determining the right funding options.
Yeah. So to be clear, what you're saying, sir, is that you have both options.
Yes.
Diba? You could do direct asset for shares, or you could raise debt and then pay cash to the sponsor. Is that correct? For future asset injections.
Correct. Because at the end of the day, asset for share swap will mean that the sponsor has to unload those shares, right? So this is where SM played a critical role. We have a ready buyer aside from the institutional buyers.
May I add on that? I'm just curious if SM will be considered a public shareholder, or di ba kasi by rules kailangan
10%.
di ba parang so hindi siya aabot sa 10%.
Yes, SM technical definition is not considered as a public shareholder because they own more than 10%. That's the threshold.
28%, correct? They own 28% of
Yes.
CREIT,
Yes.
as of today. Yeah.
Yes.
But if you sell the shares to them, then your public, di ba, will not increase. But you need to increase the public, right?
Yes. Well, it's a typical, I think all REITs naman face similar. Before asset infusion, if it's in the case of an asset for share, obviously the sponsor will have to sell down so that upon asset infusion, we don't violate the minimum public float.
Yes.
Yeah.
So currently, sir, if you can clarify, the public float for CREIT is at what percent? Right?
38%, if I'm not mistaken. Currently, public float is at 38%.
So there's still a little bit of room
Yes.
to go down.
Yes.
Okay, all right. Okay. Sir, so you mentioned already, no? So you mentioned the entry of SM na to the group, to CREIT, right? But how exactly does it benefit both either CREIT or CREC?
Well, we are very grateful to the C family. They are no strangers to our group. If you recall, they were our anchor investor, anchor IPO investor when we did the Megawide IPO back in 2011. So this is basically round two for them, and we're very grateful for their support. Having SM obviously boosts your branding. It's like a stamp of seal approval that our business model is that work. That's why they invested. And having SM also provide us access to, hopefully, access to cheaper cost of borrowing.
Okay. Yeah, of course. Now, looking at the other side of the asset infusion, no, because typically the increase in the dividends or the earnings doesn't, as retail shareholder, it doesn't directly translate to higher dividend per share, right? Because you're gonna be like issuing new shares. No? So could you explain this dynamic and as potential CREIT investors, no, how can you guarantee that that their interest is always protected in an asset injection?
Well, we do follow, we have a related party board committee chaired by independent director, and the members are primarily independent directors. And we also engage reputable third-party consultant to do the asset valuation. Notwithstanding these compliances, obviously, the sponsor is very, very cognizant of the public shareholders because CREIT, at the end of the day, is an integral component to its overall plan because it provides us the wherewithal to recycle capital to achieve our 5 gigawatts. So we will ensure public interest is put at first. All asset acquisition has to be value accretive. Okay. To answer your question, it will be very difficult, obviously, to measure dividend per share. Because if you are going to do an asset infusion, the number of shares keeps growing. I think it's very important to measure in terms of dividend yield.
And in terms of dividend yield, so you're saying, in other words, when CREIT does a transaction with its parent, with its sponsor, it will always try to at least keep or increase the current yield, the dividend yield for the current shareholders. Is that correct?
It's always a function of, that's why we monitor closely interest rates. It's always, because REITs actually serve as an alternative for yield-seeking investors. So we cannot price ourselves lower than a time deposit or the other fixed income products that enjoy higher rating compared to CREIT. So we're very cognizant of that factor. It has to be a spread over alternative fixed income instrument.
All right. Okay, so in terms of the sensitivity to interest rates, no. So how would it, because right now obviously the narrative is lower or declining interest rates going forward. How does this affect a CREIT's operations, profitability, or let's say even the pace of asset injection? Will it increase? What would the impact be?
Well, obviously, lower cost of borrowing provides CREIT elbow room for asset acquisition. Okay, but the pace of asset acquisition is primarily influenced by the speed of our sponsor completing the solar plant. Okay, so lower cost of borrowings will obviously redound to higher net profit, and higher net profit will mean higher dividend payout. Okay, and lower interest, as I mentioned already a while ago, can also influence capital appreciation because these yield-seeking investors on a low interest rate environment would look for alternative instrument that will give them higher dividend yield, and REITs are normally benefit from a low interest rate environment.
Okay. Now, looking at the risks this time, no? I understand that the contract is, there's a guaranteed base rate, but is CREIT still exposed to, risk in the energy sector?
Well, contractually, no, but from a business reality point of view, obviously, if your tenant experience poor business performance, it will somehow it is a key risk to the company. That's why we require our tenants to procure property insurance and business interruption insurance. Solar plant, operating solar plant, the main risk there would be natural calamities such as typhoon, and Philippines is always typhoon prone. So we require them to procure property insurance in the unlikely event of a total wipeout, okay? And also 6 months worth of business interruption. Based on our analysis, it will take around 5 months to fully replace and rehabilitate the solar plant so that it can generate power. So these two insurance provide protection, okay? But I would like to highlight that all our renewable energy asset portfolio are geographically diversified. That would be the natural hedge for any calamities or typhoon.
Yeah, can I ask? Because right now, of course, it's easier because you're just leasing out the land. But starting next year, you'll be acquiring the plants. That said, will you be more, I guess, vulnerable to volatility, or if something happens to the plants, like will your earnings and dividends be affected?
No, it won't change. We're not changing the business model. Acquiring solar plant, and then CREIT will lease out the solar plant facility to the operator. So it's like an
So
equipment lease.
Fixed pa rin.
Fixed pa rin. Fixed pa rin. Only that the fixed capture the power generation EBITDA, not on a per square meter lease rate. That's why it's higher, but fixed pa rin siya.
Yeah, can I just ask, because CREC naman related, because I think this week or last week you talked about the energizing, and I just found it interesting that you talked about battery storage. So I mean, how does that figure? I mean, is this battery storage thing very important for CREC, and how does it impact the operations?
Yeah. So with the battery energy storage technology, we are able to solve the intermittency of solar power generation. Obviously, solar depends on solar irradiance, right? And number two, we're able to expand to a greater market segment. Without the battery, we can only sell electricity to daytime customer. With the battery, we are able to store and deliver electricity to serve the nighttime peak as well. And our Batangas plant, actually, we're able to supply power 24 hours. So like a base load.
So that's for CREC.
Yes.
Okay, so at least the risk that CREC will not be able to pay CREIT goes down more significantly.
But it will also, at the end of the day, it will also benefit CREIT because higher, for CREC's ability to price its electricity higher,
Yes, the
it
variable.
will translate, yes.
Will you also be buying the battery or no?
That's a good question. We have to check. I think SEC is coming up with a new IRR to expand the use of proceed of CREIT, right? But that will really depends on SEC. We highly encourage that to happen so that it can open up more non-traditional REITs. We have to check if battery falls under allowed use of assets.
Okay. I want to focus now on the dividends, no? Because I've noticed that the last, let's say, 2 years, you've been paying out like 106% of income, right? So, is this sustainable? Could you explain how you could dividend out more than 100% of income?
This is more than 100% of distributable income. Please do not mistaken distributable with NPAT. Okay, distributable income is essentially net profit after tax. You deduct the PFRS revenue, which is an accounting treatment of non-cash, and then we add back the depreciation and amortization, which is a non-cash also, to arrive at our AFFO, which we peg for our dividend payout ratio. So it will always be above 100% of the distributable income because of the depreciation. You deduct it as expenses to your NPAT, but it's a non-cash, right?
So in other words, it's sustainable.
Yes.
It won't normalize to 100% in the near term, like to next year or it won't be 100. It won't go to 100%.
Yeah, let me be careful with that. In the near term, yes, but obviously we have to pay our debt. So, like if we raise bond, we have to pay our debt. So there will be time where we will have to reduce in order to allocate for debt service, principal debt service, right? Today we're able to service the coupon, but there will be time where we need to allocate to service the principal, right? But not in the near term. And by that, we will be timing it with a new asset infusion such that it will somehow offset.
So for this debt, correct me if I'm wrong, it's gonna mature 2028. Is it correct?
Yes, that's the 5-year bond, 2020. But obviously the plan is to refi.
Okay.
Yes.
Oh, okay. Yeah. I understand.
May I ask also, like, what is your allowable debt level? Because it differs, right? Not all REITs have the same allowable debt level.
Our allowable debt level is 70% of our deposited property value. That's because we are investment grade, AA plus or AA minus. Yeah.
Okay.
We have ample debt headroom. I think we can still borrow around 10 billion if I recall correctly.
Okay, sige. And then plus, if you do more asset infusion, that goes up.
Yes.
Some
yes,
more.
Yes.
I have questions, sir. So, of course, we know that your growth would be tied largely to CREIT's growth, no? But is it also possible, or is there a potential for CREIT to also acquire third-party solar assets, meaning not from CREIT, sorry?
Yes, CREIT is not prohibited from acquiring third-party asset. Should there be compelling reason to do so, by all means, yes. But the sponsor is there to provide visibility for asset growth.
So as long as there's opportunity, as long as you can raise the funds, for example, there's nothing stopping you from potentially acquiring from others.
Yes.
May I ask what is the criteria for considering, say, third-party assets?
Well, it has to be so much better than what the sponsor can provide. Sorry, it's an obvious answer.
That makes sense. That's fair. That's fair. Okay. So, of course, the question always is just to clarify, again, for our investors, CREIT or CREC? When should we consider CREIT? When should we consider CREC?
Buy both. I mean, if you buy both, your smile should be probably as big as this one. No, I think CREC, we're up 30-40% since our IPO. CREIT, similar if you include the regular dividend. Buy both if you can, but CREIT is really for those yield-seeking, dividend yield-seeking type of investors. But you know what's revealing? Because typically for REIT, you don't expect so much capital gain, right? I mean, logic dictates that capital gain is really not the primary consideration in buying REIT. But lo and behold, you enjoy your dividend, you enjoy capital gain, so you got best of both worlds.
Yeah, I think the timing was also very good because you came in during a higher interest rate environment. So when interest rates went down, capital also appreciated. So good timing for the IPO, I would suppose.
So buy both. I'm wearing two hats. Eh.
Sir, what about C-REIT versus other REITs? Because again, there's a lot of REITs also offering, healthy dividends. No? So why should they look at or they consider C-REIT, I guess, more than the others?
I think it's our unique business model. As I mentioned, our real estate, we created our own asset class. It's a renewable energy asset class in itself now. And our occupancy rate, we enjoy 100%. It's really the business model. And our tenants, the product of our tenants are basic essential. It's power, it's electricity. Though I understand consumers very strong in the Philippines, but it's a basic essential. So that's our main unique differentiation compared to other REITs. And if you factor in, so another, I don't think that the market is factoring in yet. C-REIT's asset portfolio, because solar plant occupies a large contiguous land, okay? Today, it's in a rural area. 5 years, 10 years from now, this property will be worth so much because of its contiguity, 100 hectares. It's very ideal for township development. So maybe after 10 years, 15 years, the underlying property appreciation is worth more than the leasing business already. So there's an underlying residual value or a terminal value that can be built.
Can I ask if you own all the land? I know not all the land you own, right?
We own 95% of the land, yeah, with very small percent because the landowner doesn't want to sell. So, but we have the right of, should they decide to sell, we have the right to offer.
Right, the first refusal.
Yes.
Yeah. So that said, so are you implying, sir, that in the future you're open to actually selling the property if the use of the property will be like higher compared to maintaining it as a solar plant?
Why not? We will relocate our solar plant if our asset value is 10x or 15x, right? If it makes sense, we can easily relocate the solar plant.
Yeah, but that's like a
Far
super-
future.
Yeah, far future.
Far future.
Partner naman nila si SM eh. So, there's already a buyer.
That's a very
Yeah, that's true.
that's another plus factor. Yeah, but far future, far future.
Sir, before we were almost out of time, but before we had any other risks, sir, that investors should look out for when investing in C-REIT?
Well, obviously we are also we are in an industry, renewable energy industry, where which I don't think will happen because Philippines is a net importer. While Philippines is primarily coal, natural gas, it is a net importer. So it really makes sense to transition to renewable energy. So I think the product of our tenants will not be displaced.
Yeah. There's really a long-term push, no? I believe, like for example, in China, there's opening so many like solar plants, right? For C-REIT, is it all solar currently?
All solar currently.
But going forward, like in the near future, do you expect to inject other renewable?
We
energy
are, I may be ahead of myself, we are designing a structure for wind because our sponsor has wind also. But unlike solar, it's not straightforward leasing the land because the wind only occupy a very small footprint of land. So we're coming up with a structure. We need to work with SEC and DOE and ERC and see how we can include the wind in the asset portfolio.
If it's an allowable asset,
Yes.
as you said, the battery is not
Yes.
right now.
Yes.
Yeah.
Yeah.
All right, yeah. So basically, sir, when I asked for risk, you said there's no risk. Because you said that long-term viability of solar is almost guaranteed, right? Given the structure of the Philippine energy demand.
Yeah. Well, in any business, there's inherent risk. It's how we mitigate, hedge all these risks.
All right. April, do you have any more?
I think I'm good. Yeah.
Thank you.
Okay.
Thank you.
Sir, I'd like to ask you for your last thoughts na lang, sir. last words for potential investors or maybe already investors today?
Yeah. So I think we've been listed 2 years or more than 2 years now, and we've already exhibited our business model, because when we started, there are many skepticism because obviously the structure is different. Will it work? So I think we're able to show the market that our products, how we structure it, works, and I think there's a far more exciting growth coming. As I mentioned, we will be acquiring significant size of assets. That's only the beginning. We're still very far from the 5 gigawatt target. So exciting days ahead.
All right. Thank you very much, sir,
you
for
so
your
much.
time today.
Thank
Thank
you
you so much.
Thank you. Thank you.
Thank you again, Mr. Oliver Tan, for giving us a deeper view into CREIT. And now, before we proceed to our third segment, I'd like to once again ask our moderators for their final thoughts on CREIT. Charles, would you like to take this one?
I guess for me, what's clear, you can think of CREIT as like two parts. No? First, sustainability. So Sir Oliver mentioned all of the the characteristics like the long WALE, 100% occupancy, the guaranteed base lease, right, and also the geographical distribution of the area. No, so para diversified sila. No, and of course also the long-term viability of the solar plants. No? So that's on the sustainability side, but also also the growth part, right? So Sir Oliver also mentioned the anticipated asset injection next year, 1 gigawatt, and even more than that, long term, the plan for the sponsor is like 5 gig, the target, right? So there's a lot more opportunities. Of course, again, in the country also, there's a long-term push for renewable energy. So that's a tailwind that they could enjoy for the longest time. And I guess last but not the least, the potential, no, gravy na lang to in the future, but it could be big, the potential capital appreciation of their land assets. No? So yeah, so both sustainability and growth potential seems to be there.
All right, thank you, Charles, for those key insights. Now let's move on to our next company. While Meralco is a household name, not everyone knows how the company is evolving beyond power distribution to shaping the future of energy production in the country. As the country pushes for energy security and cleaner power, Meralco PowerGen is leading the charge through large-scale solar and battery storage projects. Today, we have invited the MGEN team to walk us through their growth plans, their role in Meralco's broader strategy, and what this could mean for investors. Please join me in welcoming our two speakers from MGEN. First, we have Mr. Dennis B. Jordan. He is the President and CEO of MGEN Renewable Energy, the renewable energy company of Meralco PowerGen Corporation. He is a seasoned executive with over 2 decades of diverse leadership experience in the energy and infrastructure sector. And he has joined MGEN Renewables as the company ramps up action to accelerate the country's sustainable energy transition by 2030. He has a solid track record of delivering business growth, driving change management, optimizing performance and profitability, and leading teams on complex transformational journeys that generate value while maintaining cost efficiencies. Let's give a warm round of applause to Mr. Dennis Jordan. Next, we have Mr. Lino Bernardo, who serves as President and CEO of MGEN Thermal, the thermal operations unit of MGEN. In his role, he leads strategic initiatives focused on sustainable growth, innovation, and operational excellence. Through his leadership, MGEN Thermal is driving transformative change by pushing forward with fresh approaches to energy generation and helping establish best practices in the industry. With more than 20 years of executive experience, he has built his career across both the energy and technology sectors. He previously held significant roles at Aboitiz Power, AP Renewables, and Thermal Luzon, gaining valuable insights into power generation and renewable energy markets. Let's give a warm round of applause to Mr. Lino Bernardo.
Hey, good morning, Dennis and Lino, and thank you for joining us today.
Thank you. Good morning, and thank you for having us.
Okay. So guys, you might be wondering, why are we talking about MGEN today and not Meralco? Well, because, you know, for those of you who own shares of Meralco, you might be wondering, you know, why is a power company performing so strongly when, in fact, like, you know, usually power is considered to be defensive, slow growing, and just, you know, cruising along. But, you know, I mean, Meralco has been performing quite strongly, and one of the reasons why it is because of MGEN, which is why we're talking about it, the exciting growth story of MGEN and the power generation business of Meralco, which is driving growth. Okay, so that said, can you talk about MGEN's current portfolio and how it's expected to grow over the next 5 years? Maybe we can begin with Dennis, and then Lino, you could talk about the thermal.
Yeah, sure. First of all, good morning, everybody. I know excited to be here and delighted to be sharing with you some of the things we're doing from a renewables perspective. So at the moment, I think all of us are aware in terms of the government aspiration of bringing more renewable energy into the energy mix. At the moment, we have only something like 22% of our energy mix is actually coming from renewable. The aspiration of the government is really to push that to roughly around 35% by 2030. And then a big target, of course, is to achieve 50% by 2040. You know. And MGEN is certainly aligned to the government's aspiration. At the moment, in terms of the MGEN renewables business, and I'll talk a little bit about siguro later on to explain lang MGEN and certainly Meralco. No? The one Meralco organization is actually two verticals, the distribution unit and the MGEN business. And I look after MGEN Renewable. At the moment, we have 7 plants, which you can see probably in your screen. The total capacity for the renewable is a small 400 megawatts. You know? When I say small, that's humbly, because it can actually power almost 400,000 homes with pure renewable energy, typical household requirements. At the moment, we have 2 projects that are ongoing, April. The first one is really a joint venture with Vina, 450 megawatt AC, so that will bring us to roughly around 1,000 megawatts total combined capacity. That will happen early part of next year. But the more exciting part about MGEN is really the first in the world, and I'm not too sure whether you've heard about this, April or Charles. The biggest solar and battery project in the world is actually not happening anywhere else except here in the Philippines. This is 3,500 megawatt peak of solar coupled with a 4,500 megawatt hour of battery. You will not see any other project happening like this in the world. This is bigger than what they had in China, 3,000 megawatt in Gulmud. This is bigger than what they have in India, around 2,800. So I think we have certainly the view of the world, nakatingin ho sa atin in the Philippines on executing this very exciting project that we have in Terra Solar, which is part of the MGEN renewable portfolio. So in the next 2 years from current where we are of 400 megawatts, April, to answer your question, we will be growing by as much as 7,000%. And that will happen in the next 2.5 years. So that's really the key prospect for MGEN Renewables. Watch this space, by the way. And then outside of that, we're also focusing on something like another 3,000 megawatt peak of potential projects. We are in partnership with Actis, one of the largest renewable energy investor in the world. And recently, I think in the papers naman to, April, we signed an MOU with Aqua, which is one of the biggest player in the world and certainly biggest in the Middle East, particularly Saudi Arabia. They have something like 45 gigawatt of installed capacity portfolio in the world, and we'll tap into that experience that they have. Siguro I'll pass it to Lino.
Hey, thank you, Dennis. April, going back, perhaps we can go to the first slide. So let me just anchor our growth strategy and also start from where we are. So MGEN's core strategy is anchored on the proverbial trilemma of driving a balance between affordability, security, affordability, and sustainability. Those three things are what we are balancing. For those of you here who are not very technical, I'll try to explain briefly how the electricity market works. No? We are here today enjoying this session because of electricity, but we take it for granted, right? It's ubiquitous, it's everywhere. But it takes a lot of assets, it takes a lot of people, processes, systems, regulations to make it happen, right? So us on the generation side, we aim to provide this balance, no? Energy security, affordability, sustainability. The most expensive electricity is the one that you don't have. Pag nag-blackout, hindi po tayo mabubuhay. No? So, importante po, energy security. And we've experienced this through the many crises that we've been experiencing. Affordability, it has to be affordable, and I'll come back to that later. And of course, it has to be sustainable, right? Can we go to the next slide, please? Underpinning this, all energy industry and market is the need for us to grow our economy. So there is a huge correlation between electricity consumption and GDP growth. Tayo po sa Philippines, we are only consuming just under 1,000 kilowatt hour per person. Vietnam, Thailand is consuming about 3,000 kilowatt hours, about 3 times as much as we do. And Singapore is consuming about 10,000 kilowatt hours per person. So there is a huge gap in terms of electricity consumption, and you understand the GDP of these countries. So going back to MGEN, we have 3 pillars: thermal, which I'm responsible for; renewables, which Dennis is responsible for; and for now, our president, with my help, is also managing the natural gas pillar. Yan po yung tatlong pillars natin ngayon.
So sir, when you say base, yung thermal, that's coal. Tama ba? Thermal is coal.
Coal and diesel.
Coal and diesel. Oo, okay. Sige. Just to make it clear to the audience na
So,
yun yung...
explain ko lang po. Yung base load na sinasabi, yung ating thermal, ito yung tinatawag nating 24/7. Ito yung ating workhorse. Kumbaga sa tindahan, ito yung 24/7. Laging bukas, hindi nagsasara. Yung transition naman po, recently, MGEN, together with the Boitis Power and San Miguel, co-invested in the largest today, one of the largest LNG to power facilities in Batangas. So we believe that gas to power is a good transition to less carbon or carbon-easy technology in the future. And of course, Dennis mentioned about renewables. So where we are today in thermal, on the thermal side and gas side, so today we're about 1,500 megawatts in coal and gas, and we are a total of 3,375 in natural gas. By the way, other than our investment in the LNG to power plant in Batangas, we also have an investment in Pacific Light and Power, which is a gas power plant in Singapore. So that's a major investment. And recently, they've started a 100 megawatt fast start gas plant. And we are soon to start a 670 megawatt LNG to power plant also in Singapore that is going to be hydrogen ready. In terms of growth, we've recently made a decision to construct a battery energy storage system in Carbon in Cebu, and also to add an additional coal power plant also in Toledo, Cebu. It's about an 82 megawatt gross capacity to fuel the need in the Visayas region. And further down towards the end of the decade, we are also planning to construct a 1,200 megawatt coal-fired power plant, high efficiency, low emission technology in Atimonan. Again, to fuel the energy needs of our growing economy.
Okay, so in other words, the growth of thermal and LNG is also very attractive. Yeah.
Yes, LNG is important, no? Because one feature of LNG to power, it's very easy to construct. No? A combined cycle power plant is relatively easier, no? To construct compared to a coal-fired power plant or a nuclear plant. So, and the gas is also accessible, right? So we have Malampaya, and of course we can import liquefied natural gas.
So gas is clean, but it's not. Is it renewable? It's not.
Well, if you take a, if you,
So
if
that's
you,
why it's transition, ba ganun?
yes, it's not renewable, but it's less carbon, right? So in terms of carbon intensity, it's definitely less than coal.
Can I just add? Like, I just want to ask, because you showed a while ago the triangle, and you talked about, I think, kasi, syempre, usually we always talk about sustainability, which is important. But I think, di ba, one issue is affordability. Is that one of the reasons why there's still an expansion on coal?
Exactly. So today, if we do the math, coal is still the cheapest, right? And you know, Philippines, we still have some of our countrymen who don't have access to affordable electricity. And like what I said, no, in terms of electricity per capita consumption, napakababa pa natin. So we need to make sure that the consumers, through their distribution utilities and the industry also, have access to low cost and 24/7 electricity.
I see, Charles?
Yeah. Sir, you mentioned a while ago the LNG plant, right? And I believe, correct me if I'm wrong, that this basically was one of the big reasons why the MGEN's performance this year grew significantly. So my question is, for the next, say, for next year, for 2026, and maybe for the rest of the year, how many more like plants would come on board that could potentially be the next leg for the earnings of MGEN?
So, as I've said, the first one, the immediate one is the Carmen battery energy storage. No, it's 40 megawatt hour, 20 megawatt battery energy storage. So that's the first one that will come out. That will be sometime April, May of next year, because it's easy to install, easy to construct. The next one will be the Toledo expansion, the 82 megawatt coal plant that we are aiming to finish by 2028. And then the larger plant, the Atimonan coal plant, by end of 2030. And as I've said, internationally, we are expanding in Singapore, 670 megawatt. And we are also looking at opportunities in Malaysia as our regional play. No? So, by the way, I mentioned about driving the economic growth. Our mission is not only to do that here in the Philippines, but also in other parts of the region, including Malaysia. So we want to penetrate that part of the region.
Yeah, I have a, sorry, I have a quick follow-up. Because you mentioned all these, all very exciting, a lot of expansion plans, no? Not just in the Philippines, in Singapore, in Malaysia. How are you funding all of these CapEx, no? And yeah, could you share?
Siguro I'll start. With regards to Terra Solar, this is one of the biggest investment here in the Philippines, by the way. We had to had 6 banks support the $150 billion requirement as investment into this particular project, yung M-Terra Solar natin. But also we had a partner, Actis, which is based in the UK, but also a global player at that, actually infused a huge capital into the project, amounting to roughly around $600 million. This is the single biggest investment on a renewable project in the Philippines ever. So a couple of things, what it means to me, Charles, is that certainly the eye of the world is into the Philippines. The fact that, in renewable space, international companies can actually invest as well. This shows to us, it gives us a tick of confidence on the Philippine energy market. And that to me is a very positive signal. And ongoingly, of course, for the new projects that we have, we are eyeing smaller projects in the renewable space. Nabanggit ko kanina yung mga gigawatt projects. We're looking at another 3,000 megawatts, so 3 gigawatt project. But we're also interested on the smaller ones. On the smaller ones, of course, we'll try to use equity and debt. That's our strategy. Lino?
So for the projects that I mentioned, the battery energy storage is fully funded by M Thermal. So it shows you the strength of the balance sheet of M Thermal. It can finance its own project 100%. For the expansion in Toledo, the equity will also become from M Thermal, but there will be local financing. Similar for the Atimonan project. And there is so much interest, that we're receiving offers from other parties to participate in the Atimonan project. But obviously for that large of a project, there has to be debt.
I see. So, Sir Dennis, I'd like to ask you about M-Terra Solar, because of course that will be the major jump in the capacity of renewables. So maybe you could talk about the pipeline, like what can we expect this year, next year, like when will all that capacity kick in?
For sure. So very, very exciting mga kasama. 3,500 megawatt hours peak of solar and 4,500 megawatt hours of battery. So imagine yourself standing in Pasig, middle of Pasig, and the entire Pasig is just filled with solar panels. And also around 1,000 containers of battery systems. So we're actually phase one. Our commitment is really to supply Meralco. There was a CSP in 2022, and this project, the owners were different at that time. We bought into the project lang noong 2016. Actually, 2023, and the project actually won the requirements of Meralco. The commitment is to deliver phase one by next year, and then, of course, the full project by 2027, February 2027. The project is actually progressing well. We're looking at energizing as load by November of this year, and then energizing later on as generator by end of the year. We're pushing everybody. We're getting the support of the Department of Energy into this, and working with NGCP. Unprecedented kasi to, so we really have to work hard and convince them about the things that we're doing. And by the way, this is also the first test case for our large-scale grid-forming technology. This is the most exciting part about the technology we're bringing, because the issue with renewable energy is really, the issue is a couple of things: intermittency, and also making sure that the grid will be stable. With the new technology that we're using here, it actually allows for generation of MVAR, which helps in the frequency regulation. That helps stabilize the grid. So ito yung una na in this scale that we're actually implementing around the world. We brought April ang DOE, NGCP into China to witness actually the technology providing yung RPS na requirement by the grid, and demonstrate to them that it is being done by the new technology. The other thing is yung sa intermittency, the issue, Charles, kasi alam ho natin yung solar can only provide energy up to maximum 17-18% of its installed capacity. Ibig sabihin compared to the maximum of what the solar can actually provide for, let's say, an entire day, supposedly, it actually provides just 17%. But with a battery system, narinig nyo rin yung Citicore, but for a large-scale battery system, in fact, for the Meralco requirement, we can extend yung instead na 5 hours lang yung available mo, no? Well, 17% of 24 hours, that's almost 5 hours. We are able to extend the supply of energy at this capacity, 850 megawatts from 8 o'clock in the morning hanggang 9 o'clock in the evening. So that's really the point of this project and what's exciting about the project. Large-scale home, we have proven that it is competitive to a thermal alternative for a mid-merit requirement. So yun yung groundbreaking aspect ng technology na to.
I see.
Singit lang ako,
Yeah,
boss.
yeah.
Kasi maybe some of the audience might also be asking because Terra Solar is also under SPNEC, right? Which is another listed company. So could you explain, sir, like just the dynamics of because SPNEC is also listed, MGEN through Meralco. So how can you just clarify like the relationships and the role of SPNEC in MGEN's growth?
Napakagano na. Very good question, Charles. For those who may be looking at our SPNECO is the listed name dun sa stock exchange natin. So Meralco One there are two vertical businesses in Meralco, the distribution unit and then yung MGEN. And MGEN owns MGEN Renewables, yung hawak ko ho. And we are invested into SPNEC by roughly around initially 51%, but we increased our share recently, to more than 55%. And yung Terra Solar ho is under SPNEC. So if you want, of course I don't want to, but if you're looking at the stocks, SPNEC is owned through MGEN Renewables and MGEN by Meralco, by roughly around 55%. I think 55.7. So yun yung natin, yung structure. And then ang Terra Solar po is a subsidiary of SPNEC.
Yeah. Can I add to that question lang? So I think newspaper reports have said that SPNEC will be used as the vehicle for renewables, if I'm not mistaken. So can we expect asset injections? And, will you do like, I don't know,
No, I might be
offerings,
talking
yung mga
about
ganun?
something beyond my pay grade, but it's causing a lot of excitement. Kasi outside of, sorry April, I'm not trying to skirt kasi I don't want to provide information I'm not approved to share. But it's causing a lot of, excitement because, what will be the vehicle that we will use for future investments into the renewable space, Of course, MGEN Renewables and SPNEC, I think there's a opportunity to look into that capital structure and market structure. There's a lot of new capacity. Na-explain ko kanina, magiging almost 3,500 megawatt AC ho kami in the next 3 years. And we're looking at another 3,000 megawatt projects with very large companies as a joint venture partner. So April, sorry, not skirting around, but yeah, it's causing a lot of excitement for us internally,
Sige, so abangan ang susunod na kabanata. Anyway, so that said, okay, I mean, everything looks so exciting. Pero kasi, right now, di ba, there's a, believe it or not, oversupply situation in Luzon, if I'm not mistaken. Is this something that MGEN is worried about?
If I may, April, I think it's very good. One way to look at it, if we are enjoying low prices, it's good for you, good for industry, and that should drive the economy up. And when you drive the economy up, that will, of course, increase demand. And that will signal more build, right? So and by the way, the main drivers of the low electricity prices are the weather, and believe it or not, because of the low coal prices. So those two things are helping our electricity prices today. So we are not worried because we look at the long term. You will always experience these low prices and high prices. And what we are aiming to do is make sure that electricity prices are stable through a long period. So we look at the long term, and we are sure that at some point demand will pick up, and we are going to be there to make sure that we supply.
And how do you structure your supply agreements? Are you mostly long-term contract or are you heavily exposed to spot?
It's a mix for the long-term contracts, no, particularly the PSAs with distribution utilities. They're regulated, so they're very strict, certain procedures. But you also have mid-term, short-term contracts, 3 years to 5 years, emergency supply contracts of 1 year, and we also participate in the wholesale electricity spot market. And the other is, of course, we participate in the reserves market, which is one of our sources of growth this year. So that means we are supplying a regulating reserve, dispatchable reserve, and contingency reserve. These are all reserves required for us to run our grid, make sure that it's balanced, no? So that we don't experience any blackouts or undesirable events in the grid.
If I may add lang sa sinabi din ni Sir Lino, the Renewable Act, which was signed in 2008, really clarifies the targeted number of capacity that we need to have for renewable energy. And that target is 35% by 2030 and 50% by 2040. Those are very high targets po. No? So the Renewable Act says this will be the mix that we have. In this year, I think we're roughly around 22%. So there's still a long way for us to increase the penetration of renewable energy. And there's actually what they call yung RPS standard, Renewable Portfolio Standard. So the government initially mandated that the amount of renewable energy that you're consuming as a distribution unit or retail electricity supplier should increase 1% year on year. That was repealed in 2023, naging 2.54 po. So there will be an acceleration. So from a renewable perspective, the Renewable Act is very clear in terms of aspiration of living a better environment for our children. Yun naman ho talaga target natin. And the RPS requirement increases that. So from a renewable space, there's certainly a lot of space still to grow, April, to answer your question.
So what is Meralco's current energy mix, and do you expect it to be aligned with the the government's target of 30% renewables by 2030 or 35? Sorry.
I think April today we are about 67% gas, 8% renewables. That's the 400 that Dennis mentioned, and then the balance is thermal, right? So that's what we have today. So 67 plus 8, 75. So 25% is thermal. So 2030, thermal will remain probably 24%. Gas will be probably in the 30s or 40s, and the rest is renewables. No, I think we have a slide there. No, but maybe they can check it later on the mix. So there you go. So M natural gas is about 43%. M renewables will be 33%, and M thermal will be 24% by 2030. Not quite the mix that the government is aiming for, but thereabouts.
Highlight ko lang, sir, no? So the target is the doubling, basically,
Correct.
until 2030, the total capacity from
Doubling,
all these.
yes.
Pero sir, yung doubling, kasi like I was researching, doing the math, but then yun na nga, a while ago, you mentioned about Malaysia. And also, I think on the renewable, di ba, may ilan ba? 3 gigawatt pa.
Wala pa dito yung
Wala pa dyan.
Well, in the forecast we have there, the 379, So renewable will jump from 8% of our total portfolio to 33%, And then if some of the projects that I mentioned earlier comes to fruition, it will be bigger than the 33% there.
Yeah.
But we have work to do.
April, if I may, no, what's included in the 10,000 here, projects that Dennis mentioned, on the thermal side is the Carmen Best battery energy storage, the expansion in Toledo of 82 megawatt, and the Atimonan coal-fired power plant, the 1,200 megawatt power plant. And for 2030, I think it already includes the 670 megawatt expansion in Singapore, but not yet the other new projects that we're looking at.
So, more or less, this one is secure.
I would say yes.
Okay.
Yeah. I, there's a lot of listed power companies also in the PSE. No? So I guess my question is, what would you say is like MGEN's biggest strength compared to the other listed companies? I'm sure some of them are even your partners, right? But what would you say is your like biggest advantage over the other power companies?
Dennis, would you like to say or?
Well, many things. But of course, I do respect our other players as well. We have a DNA of my competitor, one of our competitors, so we certainly respect everybody and appreciate their contribution to our energy mix. I think the strength of the renewable business in particular, if you're looking at SPNEC, and Terra Solar, the strength is the fact that we have a contract with the Meralco for the next 20 years. That's really the value of SPNEC. And many of our contracts as well, we have a recent expansion with our existing facility that's also contracted for the next 20 years. And certainly all the other projects that we're looking for a smaller one. Hopefully you'll hear about it towards the end of the year. That's also going to be contracted through our own retail electricity supplier. Small, but the other bigger ones is really using the government JAP programs and yung green energy auction. It's a great way to de-risk your project in terms of having an off-taker for your project. So the government basically underwrites the requirement for the project. But the other side of it is also leaning on the more than 120 years of legacy of One Meralco. So, in fact, portion of the project is being executed. For the appreciation of the crowd here, we're building substations, 2 substations, 230, and 1 major substation, 500 kV. We're putting transmission for the 230 kV of around 30 towers. And then yung 500 kV line namin, we're putting 89 towers. In a span of 14 months. Guys, we will not be able to do it unless we build on Meralco, Miescor, and the capability that they have. We will not be able to do this without those capabilities. I think to me is really the inherent legacy of Meralco Group, One Meralco, the resources that they have, the fact that many of our projects is really long-term contracts, particularly Terra Solar. And of course, the strong legacy that MVP as the head of our organization in terms of really fueling growth is one of the most motivating factor in terms of pursuing some of the projects that we're doing now. Sorry, Lino.
I just want to add a couple of things. We are not the largest today, so there's headroom. The grid limits, the regional and national grid limits. So we have headroom to grow. We are truly balanced in the sense that we have LNG to power, so we have natural gas, we have thermal, we have renewables, and we have international exposure. And like what Dennis mentioned, we are really invested. We have a strong team, and we are making it stronger, right? So there's so many good things happening, and I'm quite confident of achieving the objectives that we have for the mid and long term with all these good resources that we have within One Meralco and of course in MGEN.
Okay, so we don't have a lot of time. So I guess last question na lang. So any of you gentlemen can answer this. Siguro ito na lang. Wag naman natin tanggalin si Meralco because siya yung listed entity. But so how does MGEN fit into the overall story of Meralco and target contribution to Meralco over the long term?
So, but my brief answer is we are the growth engine because it's a competitive market, no? So where you can really grow and innovate. So those two things we can do and contribute to Meralco. Dennis?
Yeah, just to add to yung sinabi ni Sir Lino, no, April and Charles, really very exciting for the One Meralco Group overall. At the moment, the MGEN vertical, or the generating arm of the One Meralco Group contributes roughly around 37% to a maximum 39% of the overall One Meralco net income. 2026, you'll see a big shift. We'll be heading around 44 to 46%, of course, depending on month-on-month performance. So you will see that the contribution of MGEN, the generating arm of the One Meralco Group, contributing more and more into the coffers of the One Meralco Group overall. I think I'd like to end by saying siguro and sharing with you that one of the statement made by our chairman that in the next 5 years, you will see the golden age. Well, that's what he said, and I hope I'm quoting him correctly. In the next 5 years, you will see the golden age of MGEN. So watch that space. Of course, after gold, baka diamond age. So please watch that space and please support us. Thank you.
Thank you very much.
Okay, thank you. Thank you very much for your time and your sharing with us.
Thank you again to the President and CEO of MGEN Renewables, Mr. Dennis Jordan, and Mr. Lino Bernardo, COO of MGEN Thermal. Okay, so Ms. April, can we get your thoughts on MGEN for our clients?
Okay, so as discussed by the two gentlemen here, MGEN will be driving the growth of Meralco, making it more exciting than your typical power company that just grows single digit every year. And it's good to know that the capacity will double in the next 5 years, plus some potential upside if the other projects that they're working on will pan out.
Just to add, and on top of all of that, they're paying out the Meralco is paying out 4.8% in dividends every year.
Yes.
Right, so there's also that sustainability.
Yeah, I just want to highlight nga na I think Meralco technically broke down yesterday or 2 days ago. So of course, Juanes will tell you not to buy it because it broke down. But for us, we're actually viewing it as a good opportunity for bargain hunters because of that growth, the growth story of MGEN plus the dividend.
All right, thank you to our moderators. And now we are down to our fourth company for today's session. So from energy, let's now move on to consumer and conglomerates. Companies that serve as key bellwethers for the Philippine economy. Few names are as closely watched by investors as this company. Our next company is arguably the most deeply embedded in the everyday lives of Filipinos through its malls, supermarkets, banks, and real estate developments. It is no surprise that many investors view it as the best proxy for both the Philippine economy and the local stock market. But with ongoing headwinds, from weaker consumer spending to global uncertainties and domestic political noise, SM Investments' share price has faced its share of challenges. Today, we find out, is it now the right time to invest in SM? Let's hear it from the company itself and find out what lies ahead. So, to present our speakers who will do SM's outlook, first, we have Mr. Erwin G. Pato. He is the Treasurer and Executive Vice President for Treasury, Finance, and Planning of SMIC. He is the Chairman of Family Cooperation Health Services Foundation and is also a Board Director of SMIC SG Holdings. Prior to joining SMIC in January 2020, he was formerly the head of treasury for Temasek Holdings based in Singapore. He spent over 25 years of treasury and finance leadership experience in various industries, spanning from investment banking, local and regional banks, global consumer finance companies, global industries companies, and government-owned global investment companies. Let us all welcome Mr. Erwin G. Pato. All right, our second speaker from SM is Mr. Jonathan Nang, the president of SM Retail. He joined SM Retail in August 2021 as Senior Vice President and Chief Financial Officer, and in January 2025, he was promoted to Executive Vice President before assuming his current role as President. As President, he oversees the commercial, finance, and support functions, which include information technology, human resources, MPD, logistics, workplace and administration, procurement, sustainability, and CSR. With over 2 decades of leadership experience in finance, accounting, and investor relations at Goodyear and Procter & Gamble. He brings with him a global perspective and a proven track record of excellence. His international career spans key assignments in the Philippines, Singapore, Japan, China, and the United States. Let's all welcome Mr. Jonathan Nang.
All right. Thank you, Sir Erwin, Sir Jonathan, for joining us today again.
Thank you.
I guess for the benefit of our audience as well, no. So because SMIC is obviously a big company, right? So as of the current year, no, so the net income mix, 50% of SMIC's earnings is from the banks. So that's BDO and China Bank. For property, 28%, it contributes 28%, so that's SM Prime, obviously. For retail, it's 15%, so that's the SM, the supermarkets, the SM store, department store, and the other retail brands as well, no? And 7% would be all the other portfolio investments. No? So, okay, so my question is, being the biggest, conglomerate in the country, right, with obviously a diverse industry-leading, portfolio of companies. Could you just briefly share what's the overarching strategy of SM?
Okay, thank you. First of all, good morning, and thank you for having me here. So for SM, first of all, we're a consumption-driven company. All of our businesses focus in that sector. And why do we focus on that sector? As you know, we are a very young and developing country. And then if you look at our GDP, 70% of our GDP is consumption-driven. And then we have a young population. So today's growth is essentially driven by today's consumers. And since we are very young demographics, tomorrow's growth will also be driven by our consumers. So as such, if you're going to look at our footprint, our touch points, because in SM, we are part of the daily lives of millions of people. And where are their touch points? Our malls, the property that they buy, our banks. So in that sense, if you're going to look at where the strength of the economy is and where our businesses are, it's actually at the core of things. So in that sense, the question that we ask is that, would there be more growth in that area? And yes, there are so many opportunities, and our strategy is really simple. We expand our network, our coverage, and we create new markets. And we do this so that we can serve more of our customers. So just to give you perspective, let's say for retail, only 1 in 3 of Filipinos have access to modern retail formats. Okay, and only 1 in 3 in Filipinos have a bank account. And if you're going to look at how our middle class is growing and how infrastructure also is improving, the demand for integrated property development will just continue to rise. So expanding in that core footprint of ours is really the strategy that we will have. Yeah.
So you mentioned about growth opportunities in the country. So what are the main growth drivers for SM?
Okay. Maybe in the slide, that's like first slide, maybe so that the people can see also. Where's the next slide? So maybe I can the next slide. Okay, maybe here. So your question is the growth drivers, right? So as I mentioned a while ago, our economy is really this is fine, consumption driven. But maybe I'd like the people to focus on the right side. So what can you notice here? Oftentimes, when we think about the Philippines, we think about NCR, where the center of gravity would be. But essentially, if you're going to look at it, Luzon, Visayas, Mindanao, they are essentially growing as fast, if not faster, than the average of NCR. So what does this mean? It means that our country, in that sense, the growth is being more inclusive. So that allows consumption-focused companies like us to be able to expand out. So in that sense, most of our expansion is really outside NCR, outside Metro Manila, into Luzon, Visayas, and Mindanao. And maybe even on the retail side, right, Jonathan? Yeah, maybe you can talk about how the retail also is trying to expand its footprint across the Philippines.
And thanks, Erwin. And if you look at retail, a big portion of our strategy is focused on leveraging our strengths. Where the malls are, there would be our SM retail footprint. And with regards to expansion, the expansion that we have seen now and will be focusing on is serving the underserved consumers. And where are they? They're definitely outside of NCR. So in the past few years and looking at the next few quarters, expansion will really be in Luzon and Vismin, where I would say more than 60% of our new stores would be located in these areas.
Okay, so because you mentioned, so it's more outside of Metro Manila, and maybe me including maybe some of the other people in the audience, no, we might be biased because we're here in Metro Manila and we're seeing, di ba, parang we're wondering, may growth pa ba? Kasi, I mean, there's already a lot of malls, a lot of stores, right? But you're saying it's mostly 60% would be outside?
And I think just to make sure that, I guess, people may misunderstand and say that, oh, so SM Retail would only be focusing on outside of Metro Manila. I'll split it into two. When it comes to opening new stores, then the focus would be outside of Metro Manila because we have a lot of underserved consumers there. But what does it mean for Metro Manila? We continue to evolve our stores. We continue to offer different experiences. Where previously, if you go to a department store, you would think that it's just shelves and just put the items there and they're just going to sell by themselves. Or consumers will just buy it off the shelf. What we're doing now is we're also renovating and refreshing our new stores, introducing more experiential in nature. I think you've seen in some of our department stores, we've already put in coffee shops. So while the moms and the kids are shopping, the dads can then sit down and take a drink for coffee. So it's becoming, we're evolving and seeing what are the consumer preferences. And that's what we're doing.
Yeah.
So in terms of, you may see that we're not expanding in terms of new stores, but we are evolving and changing how consumers shop in our stores.
Can I add just what Jonathan said? Just to be clear, Metro Manila is very important to us. Yeah, so in the times of our growth, that was really the centerpiece. If you're going to look at the malls, the retail, and the branches, when we all started, it was really in Manila because that's where the growth is. I guess the point I'm trying to make is that growth is growing outside Manila also.
I want to focus on SM Retail in particular, no? Because obviously we also know there's other listed companies that are retail-oriented. But for some reason, if you go to SM Retail brands, no, there's always like much more people, much successful, more successful than maybe the other peers, no? What would you say is like what are you doing differently, I guess? How are you able to, be the market leader in the SM retail side?
I think the first one is the portfolio of brands that we offer. I think our slogan of "We got it all for you" is really embedded in our DNA, where we cater to all socioeconomic classes. We cater to all economic classes. So we really got it all. So we cover from our value consumers down to our high-end consumers. And you could see it from our broad offering of different brands inside SM Retail. At the same time, the other piece that we also focused on is customer service. We pride on that. Aside from the fact that we're offering a broad portfolio of brands in our company, we also make sure that customer service is outstanding. And we continue to evolve. We continue to offer services that are not available in other retailers. You might have heard of personal shoppers in our SM store. Where not only can you call and place orders or look for items that you may need, you can also ask them to help accompany you, like having a personal concierge or personal butler while you're shopping inside our stores. The other piece that we're looking at is we continue also to evolve the concepts inside our stores. We continue to invest in making them look fresher and offering different services inside our retail stores.
Yeah. Since we're in the retail space already, I was just curious because one of the questions that we get from, I guess, investors is, the impact of digital. Say, how is SM responding to that and fending off competition from, digital platforms?
I call them that it is inevitable. Digital is here to stay. So the focus is really on omni-channel. So we will coexist with them. The advantage that we have in SM Retail is we have a large physical footprint. So the onus now is on SM Retail is how do we leverage our physical footprint with digital, and that's where we're now investing on technology to make sure that we're able to, if a person or a consumer places orders online, they could pick it up in our store, or at the same time, we can also deliver it to the residences. We don't necessarily have to maintain a central warehouse because we could also use our physical footprint as the fulfillment centers for our shoppers. So that also offers not only the convenience, but also a quick response time in terms of deliveries.
And I guess also the touch and feel because...
That's right. And
yeah.
I think time and again, people would say that with digital, that's going to be the death toll of physical stores. But here in the Philippines, we're still a very touch and feel consumers. They would still go to our malls. And when you're in the malls, they were still going to go to our retail stores and make sure that the items that they have, they really see it, they could fit it.
And I guess also, like, for example, from the lessons that we learned, for example, from Nike, which thought they could do 100% pivot to digital, they paid the price because they opened the door for OnCloud and Hoka to come in, right? Okay, yeah.
Yeah, Sir Erwin, the digital transformation is also happening not just in retail, but also in the banks, also in the malls. So how is SM, positioning?
Yeah, so maybe I can answer that in two ways. Okay, because so digital transformation in terms of making our operations more efficient, productivity, all the tools, application tools and everything, that is happening. But that is to make our operations more efficient. Then there's the other side of it, like investing in platforms, investing in new ways to distribute or the touch points with our clients. That one is still evolving. I suppose the most, aside from retail, the other part of our company that is more advanced in that will be our banking, which necessitates it. But for us, I think the more important point is that even if it's, I would say, branch-based or digital-based, The key aspect is that how we approach it never changes. So it's about integrity, customer service, and essentially making the customer at the heart of things. So in that sense, if you're going to look at the branches, we have a massive, one of the many bank branches we have across the nation, and that is to help our clients have access to our branches in our service. But also we have digital apps for the ones who would prefer to have banking in that manner, then that is open for them also.
Okay, so I'll move on to the next line of questions now. So among your core investments, so banking, property, retail, so which one are you most excited about, I guess?
Okay,
for our
so
audience?
excited. Well, I would say we're excited with everything. Why? Because we're retail, property, and banking. We're one or two or top of it because of our scale. But if we're gonna think about it in the perspective of where we are spending the most, okay? So our CAPEX spending is most in our property group. So here, SM Prime is the largest integrated property developer in the Philippines. So they build communities, complete communities where people can work, live, and gather. So here, what we see really is that this is where we can create most value in CAPEX. I mentioned we're spending over 150 billion the next 5 years to have 12 new malls and also refurbish 16 malls. And then maybe if I can, is it okay if I can share maybe the next slide on why the lifestyle cities. So yeah, maybe I can just share how the high value that how our capital, if we deploy to integrated life cities, the value that it creates for us and also for our customers. So here you would see that we are developing across the country integrated lifestyle properties centering on the malls. So malls would be our, in a way, that is our first foray in trying to develop the retail base. So we have the malls, and as the economy, the local unit economy around those malls grow, we add residentials, offices, hotels, convention centers, or even arena, so that together it kind of creates complete communities. But I mentioned a while ago, obviously this gives a lot of value to SM, but aside from giving customer service, this also helps fuel rapid urbanization. So as it fuels rapid urbanization, who benefits? Jobs are created, it boosts local economies, and more importantly, it improves the everyday living of Filipinos because they are exposed now to better communities, better buildings. So it's exciting both in terms of, I guess, high value, but also how we can continue to deepen how we serve our customers.
Yeah. One major project of SM Prime also is the reclamation, right? So
Yeah.
could you give an update on that?
Sure. Can I trouble you for... Okay, so yeah, I will give an update on that. Maybe just for context of size, no? So what you see in the screen is Mall of Asia complex. So this is roughly around 60 hectares of development. In front of it, and you can see later when you go out, is the reclamation project. So it's envisioned to be around 360 hectares. So it will be our icon in terms of our development. So we are finished in terms of hopefully by end of the year around 70% of critical sand filling. And then in that sense, because there are multiple steps, so the final step would really be a presidential decree saying that this 360 hectares is sovereign Philippine land, right? And then after that, you can title. But right now, we're really more on the sand filling. So critical sand filling will be finished around 76% as of now.
That's good. Any other, big projects that the SM Group is undertaking that you'd like to share?
Mostly really around this area. And then also, let's say, for example, for our residences, we are essentially introducing our signature series. So it's our more prime, higher-end developments. So for us, when we look at it, this is just a natural progression how we serve our clients. So we are very, SMDC was very strong in middle market. It's really the biggest developer there. It has provided good homes. But as you see, as our country develops, as our clients also increase in their capacity, it's just, we felt that it was time for us to enter that market also.
So for all these developments, so this is the reason why you mentioned that the biggest CapEx spend is on the SM Prime,
Yes.
correct? So how are you funding all of these CapEx?
Okay, good question, because it's a lot of money, right? So one of the things that is quite important to understand for investors, hopefully we can share, is that I would say SM Prime is in a very good position, because what is inside SM Prime? SM Prime is really a cash-generating business. It's a retail business because of its malls. And then we have 88 malls, and as you can imagine, that generates a lot of cash. Okay, then as it generates a lot of cash, and it has grown in size, if you're gonna look at their DE ratio, their debt to equity ratio, it's really below 1. So what does that tell you? We use more equity than debt, even with our size. So in that sense, what it can allow us is that we can continue to grow in a sustainable and financially prudent manner. So what does that mean? If we continue to fund this project, integrated projects, 70 to 80% would be from internal funding, because inside SM Prime is also a strong retail proposition that generates cash. And then that allows us, in that sense, to grow, and then around 20% of above that will be debt funded. Why do we choose debt funding today? Precisely as I mentioned earlier, because our solvency ratios are really quite conservative, even with our size.
I just want to ask, because I think last year, SM Prime was planning a REIT, which was delayed, the REIT. Is that still, something that investors can expect, or has it been indefinitely postponed? I mean, of course, you need it for the fundraising.
Yeah. I think the REIT is a very good proposition, especially for a company our size. I think there's a couple of factors that we need to consider. One is essentially the market, right? The market. Can the market absorb potential REIT our size? So I guess those are the questions that we need to answer, because and then if you're gonna, because the SM Primes, you're gonna look at it, it's predominantly retail, and if you're gonna look at the REITs out there right now, it's really more commercial and offices, right? So that's the first question. Is it enough for to absorb? But we think this is a very good market. It's a very good tool for us. And then second, as you would know, there are positive changes in the law, in the regulations of it, especially around use of funds. Okay, so we await a future better changes in regulations. But at the center of it really is when we enter that market, because of our size, we need to consider how it can be a very, the time it the right time, because the equity markets right now, in a way, is not, it can be better. Then, sorry, this last point. Then in that sense, because our balance sheet is very healthy, then funding, and there's a lot of internal funding, then using debt is something that is positive for
us. Sir Jonathan, I want to ask for SM Retail, because, okay, it's been almost 6 months since the global Trump tariffs, no? So the Liberation Day, right? So has it impacted in any way? Have you seen the impacts of all these global uncertainties and tariffs with your operations as SM Retail?
Not as significant, very immaterial as far as we've seen. Of course, there's much more competition coming from online because of the tariffs that have been put in the US. So, but these are more anecdotal rather than really actually seeing it impacting us. In terms of the cost, we really haven't seen a major shift in terms of availability of items or cost affecting us in terms of these tariffs.
But how are you, so far wala pa, but are you like bracing, or what's your outlook like in the next 6 to 12 months in terms of
I
this?
think it's more of continue to look at our supply chain, ensuring that we're able to place orders in or oversee orders as early as possible to make sure that we're able to secure the supply. So that's how we're managing the uncertainty.
And then one more, no? Because at the start of the year, I think one of the points that we're hopeful of is that with the inflation already at that time, slowing down, that consumption would recover and rebound, no? But so far, at least for the first half, it seems like it's not that, material rate, the rebound, right? So
I think in the first half, the impact is quite good. We've seen our growth nearing almost close to, well, it's high single digits, but part of that is also driven by the change in school opening. Now, coming into the third quarter, we're still, there's still a few days left in the month of September. We do see the impact of the change in the school opening, but at the same time, weather is not really helping at all. A lot of these storms and flooding, it really doesn't encourage our consumers to go out and shop and go to the malls. But nevertheless, we remain hopeful. Now, of course, having relatively lower inflation sustained in the past few quarters gives us a positive outlook.
I guess as a follow-up to that, usually do you see or do you expect like a lag effect in terms of when the inflation slows down and when the consumption spending would pick back up? I guess my question is, are we expecting even more, I guess, acceleration in the coming quarters? Or is this close to already the normalized level of
I think it's more for normalization.
Okay.
No, I'm just curious naman about the share buyback program. So, a first in the history. Yeah, I just like to ask what's the rationale behind this, and what metrics did SM use to decide to do the share buyback?
Yeah, thank you for that question. Yeah, so the first thought, so we had that approved by the board. So, but the first thought we had was that if you're gonna look at our share price today and our market cap compared to 5 years ago, it's the same, roughly, but our profits actually doubled within that period. So the first aspect is really that we feel that we are undervalued. And we really wanted also, in that sense, we listened to our investors, and then to essentially support our investors with this, we wanted a more substantial amount or substantial buyback given our size. So the $1 billion buyback is like the biggest in a Philippine company, because we felt that that is something that will be substantial to our investors. So that is one part, which is just a continuation of our core belief that we should take care of all of our stakeholders. And then the other aspect of that is that we believe in our growth, essentially. So we believe in our growth, that because of the opportunities in the Philippines and essentially how we are positioned, that we can actually grow and do the buyback together. Okay.
Because we know that SM is one of the, if a foreign fund, it's one of the biggest holdings, right, for SM, I guess, as a product of
30%,
of the side.
33%, yeah.
Like in your, what's their biggest concern when it comes to investing in the Philippines in general and maybe specific SM, right? What's their biggest concern now?
But yeah, you're true. That's correct. We have around 33% for investors, and we actively engage them. And we actively engage them because all our investors are important. When we engage our offshore foreign investors, they give us insights on what are really happening across other markets as well. Because when foreign investors look at us, they look at us in the perspective of what can Philippines offer. And then that is the first question, what can the Philippines offer? And then within that, us being the proxy of the Philippines, what is our play in that area? I think most of the comments and essentially the factors that they really tell us is really about Philippine macro. The catalysts that the Philippine macro would have compared to the catalysts that the other choices that they would have in other countries. And then especially in the US when most of the fund flows really go back to the US. So that is one, what are the catalysts in the Philippine economy? And for a long time, most of our catalysts is really consumer-driven growth, which is a very good catalyst within the Philippines. And that is something that we need to explain more to our offshore investors, why that is very a high-value play for them as well. It's really the catalysts. What are the catalysts that we would have?
That's also the same discussion that we have in our team. We're always thinking about the catalyst, no, for the country in general, right?
Yeah, I think it's really
could the potentially lower interest rates be the catalyst that we were looking for? How could it impact SM?
Aside from what Jonathan said a while ago, in terms of how it's positive to consumption and hence we're consumption-driven economy. Lower interest rates generally for the macro encourages expansion. And if you're going to look at how, I mean, you covered it in your research, I presume, right? But it's not only SM, the other conglomerates are expanding also. Your very good guest a while ago is just talking about all of their expansion plans. Then essentially one thinks about with all of these expansion plans, and if you're going to look at the corporate earnings really growing year on year, why is the share price not going? So that one we all need to figure out. So please invest so that it goes up. But to answer your question, yes, generally for a consumption-driven economy, lower interest rates equates to more purchasing power, lower interest rates equates to more expansion. But one thing I suppose that can be a catalyst, if you're going to ask me catalyst, of a lower interest rate is really how to improve household debt. Because our household debt is we're the lowest actually. I got a 10, 12%, the lowest. So that sector with lower interest rates, hopefully, but it's not about lower interest rates, it's about having low interest rates for a long time. And then in that sense, maybe household debt can increase in a sustainable manner, then that could be a catalyst because more debt in a sustainable manner, people spending it properly. It's like you're walking in a treadmill. So in that sense, you will go faster and further, right? So it's something like that.
So that said, I guess given that you have shares in BDO and China Bank, like how do you actually identify credit-worthy consumers that you can lend to? As you said, that is one of the catalysts to maybe spurring more growth and consumer spending.
I'm sure they have. There are matrices, industry standard, I suppose, because lending to retail is really, it has to be responsible. So there are a lot of essentially credit parameters that they would have. And I think all of these are essentially, in a way, a market practice. But what sets apart BDO, I suppose, is really their distribution. It's that, with over 2,700 branches nationwide, the access that the branch network gives to across the country, that is their advantage. In terms of credit metrics, they have very strong credit metrics when they give retail loans, but only because we need to be responsible lenders. Yeah.
Okay, so maybe since we only have a couple of minutes left, no? So I guess my question is, you mentioned a while ago, SM being the proxy the Philippine economy, consumption-driven, but also at the same time, there are concerns about the macro headwinds, diba, that the country is facing. So I guess my question is, why should we, retail investors, be investing despite all these, not just macro headwinds, but also some global uncertainty, diba? So why should we invest in SM and in the Philippines also in general?
Okay, I'll make it succinct because we only have 1.5 minutes. The ticker. Okay, very very quickly. So first of all, for the foreseeable future, I think we'll continue to be a consumption-driven economy. And then, and if you're going to think about it, 60 million, I think 60 million will be formed as our consumption base. And because of our young demographics, new entrants to that consumer base increases every year. I think per government estimates range is 800,000 to 1 million. Then in that sense, in the next 10 years, you're going to have 10 million more consumers. So in that is the macro behind it. Then the next thing is that what is our company doing? So our company our footprint is in the middle of that consumption-driven economy. And then because we believe in the economy's growth, we have a nationwide geographic expansion. So essentially, we're expanding all our core businesses. And we do this to create new market opportunities across regions. What is our tool for this expansion? We have a diverse but synergistic portfolio. So all of our businesses, retail, property, banking, our portfolio companies, they all work together to essentially fuel each other's growth. We also have discipline in terms of deploying our capital. We look really for high-value projects. A lot of projects underway. You just walk outside, you can see Pasay Reclamation, and I was explaining a while ago, other integrated property developments. But the key aspect of that high-value project is that we are building businesses for long-term growth, okay? And as such, we are undervalued with high growth potential, okay?
Sir Sir Jonathan, would you like to share any last words also on top of what Sir Erwin mentioned?
And I think we partner with our other SM subsidiaries in making sure that we continue to fuel that growth.
All right. Thank you very much.
Thank you for having us. Yeah, thank you.
Thank you. Thank you.
Thank you.
Thank you to our speakers from SM for giving us a closer view of their company's outlook. Once again, let's turn to our moderators for our key takeaways. So, Charles, what would you like to say in closing for SM?
Okay, actually, there's quite a lot, no. So, but first of all, of course, we understand there's a lot of macro headwinds, global uncertainties. But I think what's clear is that what SM highlighted is that the structural, the structural growth is still there, given the country's, consumption-driven economy, the demographics, the young population, right? And there's a lot of opportunities, but we just need to focus more on the longer term, the bigger picture, right? So I think that's what's evident in the discussion. And also at the same time, I think what's interesting or what's very good for me, is that SM is not just riding on this structural growth, but also in a way leading it or creating it or amplifying it, diba? So with all the, they mentioned like creating businesses, creating opportunities, with all their projects, developments, right? I think it would not only benefit, but also even accelerate that structural growth in the long term. And lastly, Sir Erwin mentioned, so even with the doubling of profits over the last 5 years, the share price hasn't really changed. So in a way, there's a current opportunity to be able to participate at a more attractive valuation. Yeah.
All right, thank you for sharing your thoughts on SMIC, Charles. So finally, we turn to financials. Our last company has stood at the center of Philippine banking for more than a century. Bank of the Philippine Islands, or BPI, has long been a cornerstone of Philippine banking, known for its strong brand, proven track record, and consistent execution. But like many in the sector, it is feeling the impact of shifting interest rate environment. Its share price has taken a hit in recent months as investors worry about margin pressure from easing interest rates. Does this pullback present a window of opportunity, with BPI doubling down on digital, expanding its retail and SME presence, and staying focused on long-term growth? Let's find out if this is a good time to take a second look at the stock. Representing BPI today, let me call on first our first speaker. We have Mr. Haj Narvaez, who serves as the head of corporate planning, investor relations, and sustainability for BPI. Prior to assuming his current role, he served as a president and CEO for BPI Securities, the stock brokerage arm of BPI. He has close to 20 years of experience in financial services, including in corporate finance and cash equities. And he previously served as head of equity research for Credit Suisse Securities Philippines, among others. Let's give a round of applause for Mr. Haj Narvaez. Our second speaker is Ms. May Taco, who is the Vice President and Head of Investor Relations and Capital Management at BPI, with leadership roles since 2021. She previously led fixed income markets and portfolio management in BPI's wealth management arm, where she spent 20 years. She began her career in the BPI Group in 1994 and holds degrees from UP Diliman, Bachelor of Science in Business Administration, cum laude, and Ateneo Graduate School of Business. Let's give a warm round of applause for Ms. May Taco.
Okay, good morning, Haj, May, and thank you for joining us today.
Thank
Pleasure.
Yeah. Okay, so let me begin by, asking this question. There's so many banks out there. So what differentiates BPI from all the other banks and all the big banks?
I think, I guess if you want to distinguish BPI, I think one, and this has been especially more pronounced, I think, in the past few years. We really pride ourselves on being the most customer-obsessed bank. You've really seen the transformation in BPI in the past few years. You see it in our culture, in our branches, the way that we have really broadened, the clients that we are now serving. And this pretty much is manifested even in the data that we're seeing. If you look at, we track what we call an NPS score, which is really a sign really of how satisfied customers are, how loyal customers are. And I think we have scored the highest there among the banks that we tracked in the past 2 years. So that's a sign of that. I think second, we are very much, our strategy is very much anchored on growth. We're going to talk a lot about margins later, but as you've probably seen in our first half numbers, we managed to deliver the highest or the most expansion in terms of net interest income. Our returns are likewise the highest among the top 3 banks. So I think you have a strategy that's customer obsessed and that's focused on growth. And then third, maybe what I also want to highlight is our digital capabilities. We were very fortunate enough that we made quite aggressive investments in tech, even way back, before the pandemic. We did that, focused pretty much first on the back end. So even 2016, 2017, we actually went through a lot of growing pains there. And in the past few years, we also completed the launch and the upgrade of our 7 main digital platforms. And these investments have served us well. We've been able to open more accounts. We've been able to engage more with our clients digitally. And I think both in the near term and over the medium term, this puts us in a strong position to continue to acquire more customers and also to deliver growth and likewise returns.
I see. So speaking of the growth in customer base, you've increased it from 11 million in 2023 to 17 million today.
Yes.
And how were you able to do this? And is there still room to grow?
Yeah, well, just to highlight as well, no, we have a very aggressive target, no, and we'll probably flash it later. But when our current president, Mr. T.G. Limcaoco, came in 2021, he gave us a very ambitious goal of actually increasing our customer count from 8 million customers to 50 million. Now, we still have a long way to go, but I think it's a nice number to have. And at the very least, the fact that we've been able to double our more than double our customer count in the past 4 years is quite a feat. We've been able to do that really by, again, focusing on digital. So we're getting a lot more of accounts open digitally. And second, we've been very creative, and we've been really trying to find ways to partner up with who we consider to be, strong funnels in terms of getting us to open more accounts. No? So for example, I think we were one of the first large banks to offer some of our investment products, our deposit accounts in GCash, for example. No? So really, that's how we've been able to do it. We've also, I guess we've also made it, we've been trying to make our products also more attractive to a wider swath of customers. This includes lowering the barriers to opening accounts in terms of like things such as minimum investment accounts, minimum balances that you have to maintain. And really, I think you've seen that even in the past few years. We've started to become more aggressive even in terms of marketing BPI, whether it's marketing it digitally through social media. We've really been noisier about making sure that people are aware of what BPI has to offer.
Because unique to BPI, I think, is also the agency banking. No? So where does this play a role in generating this customer base?
So agency banking was really born out of the desire of the bank to reach more customers because of what Haj mentioned, 50 million target in customer base. So what we've done is really to partner with brands that have strong presence outside Metro Manila. So that will be your grocery stores, your convenience stores, department stores, your pharmacies, including gasoline stations and even pawn shop. And some of these brands you can see on the screen. So right now we have about 25 of these brands. So what we have done is really to equip them with technology so any Filipino can go to them and apply for a BPI product. So it can be deposit, it can be credit card, it can be auto loans, it can be insurance, and so far, if looking at the chart, the red dots are the BPI branches, and the blue dots actually are the partner stores. We have about 6,600 of them as of June. So it instantly increased the presence of BPI across across the country. And you see there are a number of 300. The 300 is essentially the partner stores that can act like a branch. You can go there and make a deposit or make a withdrawal, what we call cash in and cash out transactions. So this is a way of reaching to more clients, doing more transactions without investing so much, because what we are using here are the infra and the stores and the employee of the partner store. So this one dovetails to one of our strategy, which is really, as you know, compared to the other competitor, we're keeping the number of our branches. We've slowly been decreasing it. It is because we feel that we can move some of the transactions digitally and some of the transactions through our partners in the agency banking.
So it's really geared towards efficiency, no? And also scale of distribution. Yeah.
Yes, efficiency and scale of distribution. In terms of maybe altogether, if you look at the transactions that we are doing now with the help of agency banking and with the help of digitalization, our CIR, cost to income ratio, has been going down, despite the fact that we're doing more transactions now compared to where we were back in 2021. It has more than doubled in terms of the transaction count, but the cost of doing transaction has really, in terms as a ratio to our revenues, has continued to come down, and that has also helped the bottom line or the income of the bank.
So just to clarify, so for the 6,600 stores, they can open accounts, parang ganon. Application, meaning application. And then for the 300, they could do deposits and withdraw. Is that correct?
No, for the 6,600 stores, they can go to the partner store, and they will be, there's what we have, a QR in that store where they can shoot that QR and they can be led to a portal wherein they can open, they can apply for a product. But for the 300 stores, then they can actually do a cash in, cash out. It's just like going to an ATM, but many of these areas where the blue dots are, they don't have ATM. So instead of doing that, instead of going to the key cities, they can go to the partner store and make their withdrawals.
Is there a plan to increase the 300?
Oh, yes. It's trailing the 6.6 because that 300, the program to convert them to a cash in, cash out facility has just started in August last year. So that will continue to increase, especially now that we're seeing more transactions are being done in partner stores that have cash in, cash out facility compared to those which don't have cash in, cash out facility.
Pretty exciting. Okay, so I mean, for us, one of the exciting things we noticed about BPI is its growing exposure to consumer loans. How are you able to do that? And is this an area that you expect to grow further going forward?
Yeah. So maybe we can go to this slide now. If you really look at it now, I think in general we've been quite aggressive about expanding our loan market share. No? So we're now at about 16%. I think we're comfortably the second biggest bank in terms of total loans in the Philippines. And I think what's been especially striking is we've managed to do that really by being quite aggressive about our, growing our exposure in generally the consumer space. No? So this year, I think we've already grown about 27% year on year, and it's been much faster than the growth we've seen in the corporate side. It's really a function of several strategies. I think one, we took quite a hard look at how we were dealing with clients, in terms of the types of facilities that we were giving them. So, for example, I think on the credit card side, we saw that there are really ways for us to engage better with clients, to, I guess, kind of improve on the type of facilities that we were giving them. So we saw that with credit cards. We made a lot more investments on the marketing side, making sure we kind of tied the rewards with, activities that clients like to do, for example, in the credit card space. I think typically what you see in credit cards, for example, is a lot of people like to use it for dining out, for travel. So we made sure that, I guess, rewards were kind of tied to that. On the auto loan side, and I think even on the mortgage side, we really tried to reduce the amount of time it took to get loans approved. No? So typically now, I think especially on the auto loan side, it takes about a day or two to get your loan application approved. And it's really helped us as well, not just with the clients who apply through the branches, but even working with the various dealer networks, those who actually sell cards. And I think third really is broadening your base. No, we're targeting a larger swath of clients now. So typically in the past, I'd say perhaps we were a bit more focused on kind of like the affluent clients. I think we have, I think slowly, and you'll also see this in our deposit numbers really. We are acquiring a lot more clients, especially in what we call our core mass and our mid-market. Those who open core mass and mid-market accounts.
And what about the growth outlook? Can we still see more, or do you feel like you've maxed it out at this point?
I think the growth outlook, I think we're still quite constructive, no? You saw that in the first half, we managed to grow our loan book by about 14%. And that was against a backdrop, I would say, of a more higher interest rate environment. And obviously, interest rates have slowly come off. I think the expectation is that over the next 15 months, you'll probably be getting somewhere between, I would say, 1 to 3 more rate cuts. No, so our sense is that the type of loan growth that we are seeing now for BPI and in general for the banking sector will hold. I think loan growth of about 12 to 14% is quite achievable from my vantage point now. And I think generally the trends that we've been seeing, which has been strong consumer loan growth, especially for us, will continue to hold. We're still quite bullish about certain parts of the, especially the consumer loan base. Erwin alluded to earlier, Erwin of SM alluded to earlier, but there's still a long way to go in terms of consumer loan growth. If you look at consumer loan growth to GDP, it's only about 12%. Even other developing markets, some of our neighbors, Indonesia, Vietnam, already are ahead of us in terms of consumer loan growth. I think they're at least about 16%. So just taking that in, you have at least 33% growth to just to catch up with them. I think I would add that the interest, the lower interest rate environment will help. I think it will help make loans more affordable. I think it will not only help consumers, but even help on the corporate space. I think generally, over the past 12 to 18 months, it's been a bit more difficult in that space, given some of the uncertainty. You had a lot of volatility when it comes to exchange rates, tariffs, the cost of importing. But I think slowly we're seeing more and more stability there. And the fact that interest rates are going down, I think it's going to make a lot of the decision makers a bit more comfortable to make bigger calls in terms of investments, in terms of capex. And with interest rates kind of stabilizing or at least going down at the very least, it kind of improves or increases the attractiveness of projects. So we expect, I think there's even potential for corporate loan growth to accelerate from the 8 to 9% levels that we've seen in the past 12 to 18 months.
So, yeah. Charles, you have a question?
Yeah, so, okay, so but the flip side to that, okay, at least in terms of the concerns, is that the lower interest rates could impact the margins of the bank. No? So just for the benefit of our audience, no? So the margins would be the difference between what you're lending out and versus what you're paying the depositors or the funding, right?
Yeah.
So could you comment on the outlook for margins for BPI?
So generally, the way you should look at, when rates are going down, immediately it should actually be good for the banks, because I think typically deposits will reprice ahead of loans. So typically you have a lot of time deposit accounts that usually have a maturity of 1 month. So typically those will immediately reflect the change in policy rate. But maybe it's important to highlight, I'll just direct you towards the right-hand slide here, no? And what you'll actually notice is that our NIMs, or our net interest margins, basically what we make from our investments, from lending out money, the margin has actually increased versus our cost of funding. No? As you can see here, no, our NIMs are actually up over 30 basis points on a year-on-year basis in the first half. No? And that's really a sign of, I guess, how successful we've been in terms of navigating this lower cost environment, lower interest rate environment. No? And that's really a product of our strategy to really focus more and more on non-institutional, or what is majority of which are consumer loans. Typically, consumer loans, they are not as sensitive to movements in interest rates as compared to corporates. Second, I think as I've alluded to earlier, we've been growing quite quickly in terms of the book. The first half, we grew about 27%, whereas corporate loans only grew 9%. So as the weight, or as the share of consumer loans in terms of our overall portfolio expands, that also increases our margins. No? So just to give you, not to bore you with too much with numbers, no, but just to talk about sensitivity. No? Typically, our view is that every 25 basis point move in policy rates typically has an effect of about 4 to 5 basis points on our net interest margins. So if you're looking at anywhere from 1 to 3 rate cuts in the next 15 months, that could have an effect of anywhere from 4 to 15 basis points in terms of our net interest margins. But fortunately for us, if we continue to grow our consumer loans, let's say over 20%, and corporate grows, let's say 9 to 10%, we're able to grow our consumer share in terms of our loan mix by about 2 to 3 percentage points per year. And the effect of that is I would say, anywhere from about 10 to 18 basis points in terms of our net interest margin. So the 10 to 18 basis point uplift in our margins pretty much will cover for even the most aggressive scenario where policy rates are cut another 3 times over the next 15 months. So I would say I would expect our NIMs to hold up, and so I think generally that should be good for all things equal for returns on equity as well.
Okay.
Just quickly add, no, kasi one good thing about BPI is that you have, relative to the other big banks, you have the largest consumer loans as a percentage of total loans, right? At 28%, is that correct?
I think we're now closer to 30%. So actually, in terms of our strategy, when we crafted our medium-term strategy, or an update on our medium-term strategy in 2021, our goal was to get to 30% by 2026. We're actually already there.
But at 30%, are you happy with that? And you're just going to keep it at 30%, or are you open to increasing it even more?
I think we're still we haven't updated that yet, and obviously we're there already in terms of achieving our goal. I think all things equal, and again from my vantage point, given we have a very low consumer loan to GDP ratio, I think the arrow is still pointing up there.
So, since a while ago, I asked this from Erwin in SM. And I'll ask this to you because you are a bank. So, especially now you're expanding your consumer lending. How do you actually identify, new borrowers that you can lend to? Because it seems under-penetrated, or existing borrowers who are a good credit risk and you can lend money to, because again, you've successfully grown your consumer lending.
We're very fortunate that we have a fairly big deposit base, right? We have, as I said, we have 16 million. We have 60 million customers. Most of them are depositors. We're fortunate that when you look at the makeup of our deposit mix, about 2/3, I would say there's about a 3:1 ratio in terms of retail versus non-institutional in terms of the mix of our asset base. So that really gives you a big, a very deep pool of customers that you can potentially acquire as borrowers. No, so there's been some, there's been a lot of talk about asset quality, but what I do want to highlight is that a lot of our growth really is coming from people who are already existing depositors. No? So we've done a fairly good job of mining these customers. No? So, aside from, I guess, traditional ways of looking at credit, you look at, let's say, income, you look at inflows into their accounts. I think one thing that we also do is we use a lot of data. No? So we identify, even before we target certain customers that we want to lend to, we try to identify, what type of customers are actually probably going to amount to being good credit, who are the types of customers we should be lending to. So we leverage a lot on our data. So I guess part of the growth also, and one thing we've been quite successful at, is really running tests in terms of identifying, who would be potential customers. Now, I want to assure you though, these tests are very, are done in a fairly small scale. And we also make sure that we try to balance out how aggressive we are and try to make sure that we don't, we make sure that we limit it in terms of the number of customers that we're targeting. So, in case there are potential, there's a potential increase in terms of the stress levels that we're seeing with those accounts, it's going to be managed and we're going to be able to close those issues very quickly. So I guess, yes, it's been a combination of being more aggressive in terms of use of data, in terms of identifying the types of customers that we want to lend to. But maybe also what I want to highlight is also the one thing that you get as you get more aggressive in terms of targeting clients and offering new products is you really learn more about these customers. No? And I think one thing we are doing is really refining everything from our collections, from our credit processes in terms of, and even the types of credit facilities that we offer clients. The fact that you get more experience with clients, you learn more about customers, I think only makes your credit underwriting process stronger.
I'll shift a bit at this point. No? So last January 2024, the merger with Robinsons Bank took effect. So my question is, how has this merger impacted, affected BPI? And maybe you can talk about potential, has there been synergies with the Gokongwei Group?
So I think we have a slide on that. So the merger took effect January in terms of integrating the people. We're done with that. With the merger, we acquired about 158 branches of Robinsons Bank. We're integrating half of that to BPI, and the rest we will be consolidating or collocating with existing BPI branches. In terms of synergy, what we have talked about during our earnings call is we acquired two products with RBC because of the merger. One of them is what we call motorcycle loans. We didn't have that because we tried that before in BPI, but we let go of it because the scale is really very small, and it will require you to work closely with dealership. And we didn't have that scale, but since RBC has that, we have acquired that, and that portfolio has grown to 5 billion pesos as of June, and it has grown to close to about 30% since the time of merger. And another product that we acquired from merger is what we call teachers' loans, and we have a slide on teachers' loans. We didn't have, to lend to teachers. These are public school teachers. You have to have an accreditation, and we don't have that license or accreditation. But one of the subsidiaries of Robinsons, what we call Legazpi Savings Bank, has that accreditation. So we acquired it, and that portfolio has grown to 12 billion. We have grown market share to close to 6%, whereas before it was just 3%. Now, it has grown a lot because from 27 branches of the Legazpi Savings Bank, we are now using close to 1,200 branches of BPI. So the growth potential is there because we estimate that the total loans for teachers is about 5 billion or 500 billion pesos, and we're not anywhere near that yet. So, other than that, we have onboarded a lot of suppliers of the RRHI and JGS. We've seen growth also in terms of the business that they've given us, in terms of forex, in terms of cards, in terms of wealth management. So that should continue moving forward.
Okay, so a while ago when we were talking about consumer lending, you talked about asset quality, no? And I think that's one of the concerns investors have about BPI, especially as provisions increase significantly during the first half. Maybe you can provide us some insights into your asset quality and the reason for the increase in provision. Is that something that investors should be worried about?
Okay, so maybe I can start and then maybe Haj can add. So in terms of asset quality, we've seen uptick in our NPL, and that is understandable because as we've said, we've increasing our exposure to consumer. So all things equal, then we should expect an increase in NPL. And then one of the concerns also is there has been a decline in the NPL cover. It's now down to 97% in terms of total. So what we've done actually is to show the cover per product. And as we have a slide on that, but for say unsecured loan segments, which is your personal loans, your credit card, your personal loans and a credit card, you'll see a cover of more than 100%. But for those segments like auto and mortgage, we will have less than 100% cover because these are really collateralized. So when we look at it, of course, there's also concern that the provisions has increased as mentioned by April. But when we look at it, we look at all, yes, provisions on one side, but then there's also revenue on the other side. So we add up all the revenue that we get from interest income, not just interest income, but also from other fees that come with a higher loan volume. So that will increase for credit cards. That may include your annual fee income, your income every time they make transactions, your application fees if these are auto loans. So all in, we compared revenue together maybe with the increase in provisions or maybe NPL formation, net of recoveries. And as long as we see that the revenue pretty much, much covers or more than covers what we see in the provision, then I think we're on the right track in terms of how we're the thinking behind the continued growth in our consumer loans.
So maybe just to add, I think one way, and I think you can also, I would suggest to look at it is you look at because I think when you look at that shift to consumer, right? Obviously you get a revenue uplift, but then you also get, because really the default rates in consumer inherently are higher than corporate, no? So I guess you have to look at it holistically, What is the revenue uplift or margin uplift you're getting versus what you're getting, or what you're losing out on in terms of having to come up with more provisions, no? And I think you can look at BPI, you can look at how other banks fare. I would say that even if you adjust our margins to capture the change in risk or the change in provisions, what you will still see is that we've been able to manage that margin even in light of the higher provisions, no? So in effect, it hasn't been really a drag on our, I would say it hasn't been a drag on our profitability.
So in other words lang, no, just to, I guess, to phrase it this way, no, so it's more manageable, both manageable and in a way also a strategic decision, no, to really, because you're focusing on consumer loans rather than a structural concern about the, you know, the asset quality or the creditworthiness of the country.
Yeah, I wouldn't say it's that. And I think what I want to highlight now, I think moving forward, we've talked a lot about interest rates. I think all things equal, I think what you typically see is that, you know, unless there's a major issue, there's a major event that's going to lead to the economy slowing down a lot quicker, lower interest rates in general should be good in terms of the effect on NPL formation. Though. So, you know, aside from maybe potentially some pressure on margins of certain businesses, what you'll also see really as an offset or a counterweight for that is that I think you will see potentially some more stability or potential movements downwards in terms of formation of new NPLs.
Yeah, and I also want to highlight that, for example, last year I noticed that your provision level went down.
Yes.
It might also be a function of that this year it's...
Yeah, it's more like a function of where you are coming from, right? Part of the reason why our provisions really went down significantly in 2020, or in quite, I would argue, lower levels in 2023 and 2024, so we had such a big buffer. So what you're seeing now is more of a normalization of provisions.
Mm-hmm. So I'm just curious, based on the first half provision level, as a percentage, say, of total loans, is that something we can expect going forward, or do you expect it to still go up?
I think generally what we've said is that, you know, credit costs, you're probably looking at like 65 to 70 basis points. So pretty for the full year 2025, no, as a share of you know, loan ADB. So not far off, I would say, from the first half levels, no.
Okay, so probably more normalized growth next year, in line with...
Yeah, the sharpness of the move perhaps is what maybe investors noticed. I wouldn't expect such a sharp, you know, this year is, in a way, is different because the past 2 years has been quite low given the high cover that we were coming from.
Okay, so since we're out of time, maybe you guys have closing thoughts?
Yeah. Well, apologies, I wasn't able to greet our audience earlier, but I'd like to thank you again for attending this event and giving us your precious time over the weekend to listen to our stories and I guess to allow us to share our outlook. I think moving forward, no, we're quite you know, we're quite optimistic. We continue to remain optimistic about the outlook of our businesses. As I mentioned, we expect I think loan growth to remain quite strong, no, over the near term. We managed to grow 14% in the first half. I would say, you know, that's kind of at the top end of our range in terms of how we're looking at loan growth in the near term. We think we can keep margins, our net interest margins where they are, and I think what's really going to help is the fact that we continue to grow quite aggressively in the consumer space. And you know, I think again, if you could take away anything, or if you could have a lasting, you know, 3 key takeaways as in terms of how you can look at BPI as a business or how you would profile BPI. I think one, we are a customer-obsessed bank, and I think that's seen in the numbers we're seeing in terms of our customer growth and in terms of the satisfaction scores that customers have been getting. We're a bank that's focused on growth. We're going to continue to target growth in accounts and growth in terms of the transactions that we do with clients. But we're going to balance that growth with also efficiency. So the fact that we made the investments in digital and we continue to invest, I think is going to help us in terms of an efficiency standpoint. No? So we managed to generate 15% generally close to 15% ROE in the first half. And that's something we're going to continue to target in the near term. No? And I think what you've seen is that the bank has been able to grow its revenues much more aggressively than the growth in overall costs. No? So we're going to continue to focus on that. And again, so thank you very much. Thank you, Charles. Thank you, April, for your time.
Okay, thank you, May.
Thank you, thank you.
Thank you.
Thank you so much.
All right, thank you to our speakers for sharing your insights about BPI. Okay, so to wrap up our final company discussion, let's see what our moderators would like to say about the company. Miss April.
Okay, so for BPI, well, I think as discussed earlier, you talked about concerns about margins being one of the reasons for the share price going down. But again, BPI showed that their margins actually weren't going down. This is because of their, the margin pressure is being offset by their growing exposure to consumer lending, which is good. And I think at least they addressed the issue about non-performing loans and how, part of the increase in provision is not because they're really, suffering from a sharp increase in NPLs, but more because, a function of coming from a low base last year and also, their greater exposure to consumer lending means that, it's inherently riskier. So they have to set aside more provisions. But of course, the focus should be on the overall growth in revenues, which is net positive. So yeah, I mean, those things said, it seems like, I would say the sell-off of BPI seems like a good opportunity. And maybe you can talk about valuations, Charles?
Yeah, so with the recent sell-off, so the valuation's now down to 1.2 times book. So I believe that's very reasonable for BPI, especially given its profitability of 15%. No? So I think for me, what's most important is they address the two biggest concerns that the market, I think, has currently, which is the interest rates, potential decline in interest rates, and also the asset quality, so the NPLs. I think they addressed that. They've talked about how it shouldn't be that big of an issue at this point. And also that there's growth ahead, right? There's still structural growth that they could see, both in terms of higher loan growth, higher revenues, and at the same time, efficiencies, cost efficiencies going forward.
All right, thank you, Ms. April and Charles. And with that, we conclude our company discussions for today. Let's give a big round of applause to all our speakers and moderators for sharing their time and insights with us. So now, to formally close our program, we have again Ms. April.
In my YouTube channel, I always remind everyone to be smart, selective, and invest intelligently. And while many of you rely on COL's research team for guidance, we believe there's no substitute for personal due diligence, hearing directly from the companies themselves. That's exactly why we organized this Investor Summit, to give you the chance to learn straight from the horse's mouth, as they would say. So we hope today's discussion helped answer some of your key questions about the companies we often talk about and the industries they operate in. Ultimately, our goal is to empower you to make more informed, confident, and intelligent investment decisions, ones that have a greater chance of long-term success. On behalf of COL, I'd like to sincerely thank the 5 companies that we featured for sharing their insights, and of course, all of you for joining us today, despite the threat of a typhoon. Have a safe trip home and enjoy the rest of your weekend. Thank you so much.
Thank you, Ms. April. And thank you again to everyone for being part of our COL Investor Summit 2025. For more COL updates, follow us on our social media channels to stay in the loop on our upcoming events. And we look forward to seeing you in our future events. This has been Lorraine Reyes, and see you all again soon.